Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey everyone, welcome. Thanks guys for joining. We're gonna get started in about 2 minutes, and hope everyone's having a great day. We're gonna go through today's news. The markets are very choppy, very volatile. So there's lots of news coming out regarding Iran and everything going on over there. So please trade with proper risk management. If you're here to learn, please learn how to trade, and let's have a good session. Okay, guys? 2 minutes and we're gonna get started.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome. Good afternoon. Thanks everyone for joining. It is almost 11 a.m. Eastern, and it is Wednesday, midweek, hump day, March 25th, and almost the end of the month of March. So this is basically a whole quarter since the new year. And this is a good time this weekend to wrap up the first quarter of the new year, to reflect on your trading, go over your journaling, see how you've been trading since January, February, and the month of March. That's 3 entire months, 1 quarter. It's basically when a corporation has earnings every single 3 months. They report their earnings. Were they good? Did they exceed their previous numbers? Did they beat the numbers? Was it a disappointment? So things like that. As a trader, we got to go over these things as well. Every single day we have to make improvements on our trading and reflect, every week, every month, but every quarter is a very important one. And guys, I just want everyone to understand, if it hasn't been the greatest year trading so far, understand that volatility is at all-time highs. And we are trading through a war. We're trading through uncertain times. We're trading through high volatility. And if you're struggling, don't get too upset with yourself, because it's not easy. Even for very experienced traders, even for a lot of veterans trading through this, it is not easy. But one thing that we can all do together is lower your sizing, lower your risk trading through this until the market stabilizes, until the world stabilizes, until there's peace negotiations and things like that. Then we can resume regular trading with regular volatility. So, and I also want to say to those traders that are doing really well, if you're doing really well through this volatility, then you are doing extremely, extremely well with your trading, and you should be very, very proud of yourself. Okay, so everyone is at different levels. We understand that. That's how trading is. Some of you guys are going to be doing very well. Some of you guys are going to be just right in the middle. You did well, you gave it back, and you're right there. You're right at break even. And some of you guys are still struggling. Okay, but we're here to help everybody at all levels, whether today's your first day trading or you've been trading for 30 years. We're here to offer guidance, coaching, and to help you navigate through these very volatile markets. Okay, so we take it one candle at a time as scalpers. So we're going to take it one session at a time with you guys, okay? Every session that we do is like a daily candle. So we're here for a lifetime with you guys, okay? As long as Dave and I are still kicking around, we are here with you guys for lifetime, okay? We're not going anywhere, okay? So we are very transparent. We show you what we do live. We send out trade ideas and signals. We also have the Discord group with all of our members in there sharing their analysis 24 hours throughout the day because we got members from all over the world. And we also have a website with tons of education. And you guys remember in Zoom, we used to do back in the day some Wednesday webinars, like Wednesday webinars, Q&As and things like that. I think we had a discussion yesterday at the end of the day. We might go back to having a Wednesday Q&A session with everyone on Zoom. You're welcome to come in, ask any questions, and myself and Dave are here to help you guys, okay? We've kind of went away from that because we've been focusing more on live sessions, but we will dedicate maybe one session per week for you guys for Q&A, okay? So first things first, there's going to be some rules on these calls, okay? Just like you should have some rules when you're trading, we need to have some rules on these calls because sometimes it gets a little carried away. And we're not just here for just buy and sell. Are you buying or selling? Are you buying or selling? We're here to actually educate how to actually trade the markets properly, okay? So I know a lot of traders come here new and think we're just a buy and sell live channel. We do trade. We look for setups. We will trade and we'll get into trading, right? But there's a process that you got to do to get to the trade, okay? So that's what a lot of traders don't understand. They think right now they just see a black candle, now it's time to sell. That's not necessarily the case. If I was just to trade right now, I have no idea, again, how gold was trading yesterday, the day before. Is it on a monthly downtrend, uptrend? What is going on, right? What were the bigger days? Where was the volume? Was there any news in the past and things like that? So that's why you got to do a little bit of a top-down analysis and learn. So I have just a couple rules, guys. They're real simple. Rule number one, on these sessions, just relax. Take it easy, guys. Take a deep breath. Relax, okay? If you're here to learn, you're here to learn, okay? And I promise, if you're here for live trading, we do live trading. We will get to that, okay? Just be relaxed, okay? And rule number two is if you can't relax, smoke some weed. That's it. That's rule number two. If you can't relax, smoke some weed. That helps me be relaxed, okay? Rule number three is if you have a question, ask the question pertaining to what we're doing, okay? If the question has nothing to do with what we're doing, I'm probably not gonna entertain that question, okay? I entertain questions. If we're doing a top-down analysis and you have a question about the top-down analysis, that's a good question. If we're doing top-down analysis and you're asking me, and we're on gold, and you're asking me, should I be buying Bitcoin next week? I don't know. Like, you got to understand, I have no idea what you're talking about, okay? So that's what we got to do. Those are the simple rules on this call. That's it. And if you're here to learn, I promise you, you will learn something on every single call, okay? And today, we're going to do a top-down analysis on gold. Normally, what we do is one index. We do, like yesterday, we did Dow Jones and NASDAQ, but what I want to do is something different today. We're going to do gold, okay? And because a lot of snipers have been saying, the markets are really volatile. Gold is very erratic. I understand it is. So we can slow it down with another security. And I'm going to do a top down on a currency pair I haven't done in a long time. We're going to do GBP USD after we finish gold. And I want to show you the difference between gold and GBP USD, a currency pair. You're going to see the volatility is a lot lower with GU. You're going to see that the body of candlesticks, like if you see like this big blue candle, and you measure it on gold, that's probably a 200-300 pip candle. If you see the same size candle with GU, that big blue candle like that might be a 20 pip candle on GU. So you got to understand exactly what you're looking for. And if you're a new trader or you're just looking for less volatility, I recommend and suggest you move to Forex currency, okay? And there's a lot of different currency pairs you can do. Wherever you live around the world, you can concentrate on your own currency. If you live in Japan, you can do the yen. If you live in the UK, you can focus on the pound. If you live in Canada, you can do the Canadian dollar. If you live in America, you can do anything paired with the US dollar, okay? And specific sessions, if you're trading in Europe, you should be focusing on the euro and the pound. If you're trading in the Tokyo session, session, you should be focusing on the yen. If you're focusing your trading in the North American markets, you can focus on the US dollar, Canadian dollar, and things like that, okay? So again, with the rules, I don't just go start trading. We have rules. Rules are we go through today's news, okay? So I get my news right here. It's a free website, Forex Factory, very simple. Today's date is Wednesday, March 25th. Always double check you're on the right day because sometimes you're going to scroll and you're going to be on the wrong day. That would affect your analysis if I was on yesterday or tomorrow. So we're on the right day. I can see that where the day gets started in Europe, 3 a.m. There's a lot of British news. So that, again, if you're trading the British pound at that time, that's going to affect the pound. And if there's high impact red folders, you can see you have a UK CPI year over year folder over here. We also had the ECB President Lagarde speaking at 4:45. Okay, and we continue to scroll down. You see now we're moving into North American time. 6 a.m. Eastern is when pre-New York starts, okay? And this is when the volume from Europe starts to enter into the North American markets, and then it moves into New York, it moves into Toronto, and here in North America. And now we are post Wall Street right now. It's 11 a.m. and Wall Street opens up at 9:30. So you can see right now the stock market is opened up. So that brings in volatility, that brings in volume in the markets. Stock market starts trading right now. And the Forex and futures cycle is 24 hours Monday to Friday, okay? And then we see normally at 8 a.m., 8:30, we have here US or Canadian impact news. I don't see anything high impact because I don't see any red folders. There's a lot of low impact US folders. And also, guys, if you're trading gold, understand that at 8:20 a.m. Eastern is COMEX market, okay? That's commodities exchange. That's the metals market that opens up specific to metals. And at that time of the day, there is volatility. And then continue to move down, 9:30 a.m. is Wall Street. Every single Wednesday at 10:30 a.m. we have our US weekly crude oil inventories, okay? If you're a crude oil trader, you can follow the supply and demand on a weekly basis. Just like tomorrow we have our weekly unemployment claims every single Thursday at 8:30. These are crude oil inventories. This affects everything if you're trading crude oil. If you guys read the news yesterday, all throughout, there's a lot of bombing going on in the Middle East and Iran and all over the Gulf states, affecting the global supply of oil. The Strait of Hormuz is being closed and things like that. But there was also an oil refinery in Texas that went on fire yesterday, and that will affect the supply and demand of oil in the United States. I didn't read the full article to see what caused that, but I just saw it pop up yesterday. I heard it on the radio. I'm not trading crude oil as much as I used to due to the volatility in the spreads. I'm more focused on other securities right now. And also, guys, anytime President Trump speaks, you have to know, guys, if you don't know from now, that when Donald Trump talks regarding anything, the markets move. If you saw at the end of the day yesterday how the markets moved, if you saw 7:03 on Monday morning when we started, how the markets move when Donald Trump talked, he has like right now, 7:20 during the futures market, right before it opens, President Trump speaks. That's later tonight. If you click on the folder, it says he's due to speak at the National Republican Congressional Committee annual fundraising dinner, okay? I don't know what he's going to talk about there. If he has a teleprompter he's going by, or if he has if he goes off script, he could be talking about anything. He could be talking about maybe not even about the markets. He might be talking about other things, but the market will move with whatever he says if it's impacting the economy and anything war, if you're trading gold, oil, things like that, okay? So that is when I see that. Now, if I'm holding an overnight position or if I'm looking for a swing trade tonight, this could affect that, okay? What if I go into a long on some security and he says something that causes it to go opposite direction and then the markets are closed and I can't do anything and then I got to wait till it opens and then I'm in drawdown. So you have to plan around your trading. You got to see the next day, is there news, any high impact? Is there any big speakers? And sometimes it's just luck of the draw. Like right now, there's remarks being released out of Iran right now. Trump might start talking. And if it's not scheduled, there's nothing we can do, right? The only thing we can do is if you go in to buy and sell on any security and Trump talks, yes, it could benefit you if it goes in your direction. But if it goes against you, it could be a massive candle going against you. We can't know exactly when he tweets. The only thing that we can do is manage our risk. Okay, so I know that he can talk at any time of the day. So when I'm taking a trade, I know that, so I lower my risk until the market stabilize, and then we go back into a normal trading environment. Okay, so that's today's news. Earnings, I always just look at pre-market earnings. Okay, no big names. And then after hours too, look in your after hours, because this can affect the markets too if you have a big name here. For example, Nvidia, Apple, Microsoft, Meta, Costco, Walmart, like those big names that can move the entire S&P 500, NASDAQ, or US 30. Those are the names we focus on. I don't see any of those big names in the after hours today, so no real concern on earnings, okay? And then we just move into the day-to-day news right here. Why market bets for interest rate hikes in Canada are so high. So there's speculation that in Canada, they're going to increase the interest rates in the next meeting in July. Here's the article stating why maybe they're going to do that. Oil falls near US $100 a barrel as Washington ramps up the push to end Iran war. So they're trying to end the war. They're saying they're in negotiation talks. Iran on the other side is saying, no, we're not looking for negotiations right now. Both sides are talking. Which side do I believe? I don't believe anything. I don't believe anything until it's done, right? Because they're all, in my opinion, they're all full of shit. That's how I go about business. They're all full of shit, okay? And then I don't trust this guy. I don't trust that guy. They're all full of shit. So what I trust is when it's all done, said and done, and I don't see any more missiles flying and killing any innocent civilians. That's when I understand it's done. But for all this is all politics. This is all propaganda. This is all bullshit. This is how they get the markets to move up, down, sideways. This is all part of the game of moving the economies and affecting other countries and how things move. Hopefully we're old enough, mature enough to understand this is how markets operate. If you're new to this, then I'm telling you, you got a lot of history to learn of the global markets and geopolitics as well. Gold extends gains as reports of Iran war talks over here. So if you're trading gold, it's moving. So everything you can see, a lot of news is on Iran, gold, oil. All the articles are here for you to read. There's other articles. We can see what's going on in the markets and everything like that. Okay. Continuing. Guys, we do have a Discord channel. I saw you guys were talking earlier in the YouTube chat. We do have a Discord, but it's for members. If you join the group, you're welcome to join into the Discord group. We have a Discord channel for signals and trade ideas, a separate channel right here. And then we also have another Discord channel for all of our members who are trading in their specific channels, right? In indices or commodities and things like that. Okay. We sent out a couple signals today. Here's a quick little one, 4550 psychological number, looking for sells below there, but volume closed, retested and dropped. So that's how a signal comes out. We're just looking for specific areas. And that was a move. You can see those little candles are big candles, 160 pips. And then you got to manage your risk with those, okay? And there's also a free Telegram channel pinned at the top of YouTube for everyone. Suggest you guys join this free Telegram group. This gives you all of our links for our YouTube sessions, everything we do over here. Guys, this was some old school scalping back in 2022. See, those are big. These everyone thinks run. That's 100 lot. No, it's not. It's just you can see by the pips. It's not. Some brokers have different lot sizing for the pips, but that's a 10 lot, 5 lot. You can see consistency. That's scalping the markets, not looking for massive moves, but using bigger lot sizing to make up for that. This was back in the day, like for looking for 10 pip move, 15 pip move, right? Now we're getting, I'm telling you, 100, 200 pip 5-minute candles. So the volatility has completely changed. This was DAX. I woke up one morning and was trading the European markets. Instead of trading Dow and NASDAQ, I was trading DAX. So just to show you guys some things that we do here, these were some trade setups yesterday. That was a gold setup for 500 pip drop, and other things that Dave does in the New York sessions. Everything is here for you guys. Free blogs, the growth and fixed mindset, and just some jokes, guys. Okay, we got to have light when look at this, okay? Gold was 4,400 in December 2025, and gold was looking good like Sydney Sweeney over here. But Sydney Sweeney didn't follow her risk management. She didn't pip and dip. Gold ended up moving to 5,600. She was up 1,200 an ounce, and she didn't do anything because she got greedy. She thought gold was going to go to 6,000, 7,000. And then gold found a big seller, found some supply, and came all the way back 3 months, and gold is back to 4,400. Now Sydney Sweeney looks like this person over here. So guys, this is jokes, relax. We like to have a good time on these calls, but that's just a meme of pip and dip. Get your pips and dip out of the market. Get your money, and then you can look like this. If you don't, you're gonna look stressed out like this person over here. So guys, it's jokes, relax. We're here to have a good time. We're here to entertain and educate, okay? And guys, if you wanna join the team, we'd love to have you guys. We have promotions right now, 50% off, okay? On 3-month, yearly, lifetimes. I will make something for the first 3 people that sign up within this week on a 1 year or a lifetime. I will also include a free 101 with myself, and it will be like 2-3 hours. I'll get to know you. I can answer any questions that you have when you're coming into SST, and I can navigate you through the Discord and the education session and help you with what you need. And if I know that you're here for a long term, for like 1 year or a lifetime, then I'm willing to spend that time with you. But it's for 3 people, the first 3 people this week that sign up on that. They can message and I will do that for you guys, okay? It's kind of like saying thank you for joining us, and I'd like to get to know you guys and give back to you guys, okay? Lots of live sessions throughout the week, all on our schedule. Guys, it's in local time. So someone messaged me from Dubai yesterday and said, Ron, what time? So if you go on the website, the website automatically goes to your local time. Okay, this is our local time. Like right here, Wednesday, right now it's 11 a.m. Eastern. Your local time will show on the calendar here, okay? So right now we're doing New York sessions. Next week, Dave does New York always. I flip-flop every couple weeks from Tokyo to New York's, Tokyo to New York's. So I'm just telling you guys in advance, for the next 2 weeks, we're gonna go back to Tokyo sessions starting Monday. For the next 2 weeks, we'll be going back to Tokyo because we're having some really good moves, and it's a fun session. So we're gonna go back to doing some Tokyos, okay? And there's free blogs available for everybody over here. Take advantage of the blogs and continue to educate yourself. And guys, finally, hit the likes on YouTube. Thank you guys, 200 viewers. Subscribe to this channel. We do appreciate it. And we're on our way to 100,000 subs. Okay, so now let's see right now news-wise. See this? This is called Financial Juice. So this gives us live remarks throughout 24 hours. This is available for you guys on Discord. You guys have it. And if there's any big fluctuations in the market, I always look at this. Okay, and then I can see what happened. So right now you can see remarks coming out of here. I can scroll earlier in the day. If you see these red dots, these are like high impact breaking news. So you can see that there is some news just after 10 a.m. regarding Iran. There's more over here. So right here at 10, exactly 10, breaking news, Iran will end the war at the time of its own choosing. So here it is, so it doesn't look like there's peace negotiations right now. They're trying, hopefully they can try, but maybe they have different ideas. Okay, so guys, now what I'm gonna do is a top-down analysis. Okay, so this is where I go on the higher time frame of this security, gold, and I go from the daily to the hourly, then finally we'll come back down to the 5 minutes, but we're gonna have some yellow lines up here. We're gonna have a high of a day, we're gonna have a low of a day, we're gonna have some hourly lines, we're gonna know exactly what the trend is doing, we'll add some indicators after, and we'll complete our analysis, okay? So if you're here to learn how to do a top-down analysis, this is the time I suggest you learn. And one other thing I wanna say, okay? This is my strategy, right? This is the way how I trade. I'm not saying that if you learn this, you're going to be successful with your trading, okay? I learned price action self-taught by myself, okay? But I didn't know what a Fibonacci was, Okay. And I learned that from someone else. I was learning how they used it. Then they taught me retracements and things like that. So I'm a person that's open to learn new things. That's a growth mindset. I'm not stubborn to understand and tell you guys that this strategy is the only strategy in trading and you should only be doing this and that's it, right? I'm not going to say that to you. You can utilize this and combine it with the way how you trade. Maybe some traders say, Ron, I've learned how to do this and it's a game changer and it's really helping me. That's fine. I've had also other people say, Ron, I've been trying to learn this strategy that you do and it's not working for me. That's fine as well. I understand that. I'm not saying it's going to work for you. And then I had other traders tell me, Ron, I took a little bit of your strategy, I combined it with my strategy and other strategies that I learned, and I put them together, and now it's starting to work. That's fine as well. And I'm not a person to knock other strategies. Someone asked me, Ron, do you know what ICT is? And I truthfully told them I don't know what the hell ICT is. But if you understand what it is, and you're consistent with it and you're getting good gains from it, stick with that. I'm just showing you a top-down analysis, and you can combine with what we're showing, with what you're learning, and any other type of mentor is telling you, or whatever else you're learning, and combine it together. But at the end of the day, if it makes sense to that person and it makes sense to me and it doesn't make sense to you, it doesn't matter who you're learning it from. It needs to make sense for you, okay? So this is the most simplistic way of trading. Like, I teach my children this. My son is almost 15, my daughter's almost 10. This is what I teach them, okay? And they're learning from it, okay? I'm telling you the honest truth. I teach my kids this. I wouldn't teach my kids this if I'd never believed in this. Like, you see this big black candle? That's a pretty big size candle. I tell my daughter, 10 years old, when that closes, cut it in half, right? I taught her how to use that Fibonacci where she can find the point of control. That's it, right? That's all we're doing on that candle. We're not working magic or anything like that. That's very simplistic. We have red news coming out right now. Okay, so there is news, high impact news. We're getting moves right now. Guys, the markets are moving. I understand you guys want to get into trading. I get that, okay? But you can see right now, just real quickly, there is a pattern coming up. There's the neckline coming back up. There's the double top. We're getting the second drop off the M top with more volume. There it is. So it's filling that wick and potentially filling that wick. If this candle closes below this right here, where the pivot is, that's a great structural candle. You cut that thing in half, it might come back up and go back down. If the blue volume picks it back up and closes back above here and retests that, it could come back up, okay? So this is now, it's breaking. It could be an impulse break. It could be a closure, okay? But guys, like, I can get right into this and follow the next candle, but that's that. I don't want to teach that style, okay? Because I used to do that for years and I made a lot of mistakes. So I have to do what I do, and I apologize. This is where someone's going to say, Ron, the markets are moving. We have to be trading. I understand that, but you see, I haven't done my top-down analysis. So I have rules. I don't know about you guys, but I have rules. I don't trade until any chart if my top-down's not done, okay? So I start on the daily. I'm going to disregard this move. You guys are going to have to watch it. This is where I trust you guys. See how it's like an impulse coming down and it's coming right back up. So it could be they came down there, they picked up all those pending orders, and it could be potentially flipping back up. Okay, so you got to watch the close. There's 48 more seconds. And the key pivot line is kind of right over here. I'll just make it so you guys can see and you guys can follow it while I'm doing the top down. Like right around here. You see how there was support there? There was support there. It's like right here. Okay, and then see how the volume came right back up there, okay? And if you got in a sell, measure the size of the candle. Like, that's why I'm saying, guys, like, pip and dip. That candle dropped 250 pips. And if you don't do anything, it is subject to come right back up, okay? If you're trading before the candle closes, okay? That's what an impulse is. Now it's back above there, okay? So, you know, and then if it continues to sell down, you got a big wick to fill. It's not a short wick. So that's why you got to understand wick analysis and things like that, okay? So I'm going to go on the daily. I apologize, guys. I'll try and do it a lot faster, but we have to get this done, okay? So this is the daily. And also, guys, I apologize, but I don't want to be rude. I have to say hello to everybody. Dale, welcome. Good afternoon. Conrad, thank you for joining. Cindy, Danny, tomorrow is a big day. Albania plays Poland, and Kosovo plays Slovenia. I'll be watching those games tomorrow for the World Cup qualifying. This is the playoffs. Christoph, welcome. Thank you for joining. A1 Everything, Sergio, Lady Stone. Thank you guys. And Krina, thank you for joining. Dave's call was awesome. Lady Stone, amazing. Guys, give shout out to Dave. Dave is a big part of SST here. You guys don't know him unless you're from old school when we started YouTube back 6 years ago. Dave was on YouTube, but he's now, all his sessions are private in the Zoom room. So some of you guys don't even know Dave. So that's the funny thing. Some of you guys don't know who Dave is, but Dave is the better half of SST over here. And he's the more serious one. And he's the sniper in the Zoom room, helping getting pips. And he's also sending out signals and alerts for us while we're on these calls as well. Okay. So we work as a team, we work as a family, we work as a community here at SST to make sure that all of us are winning, okay? And it does take time to learn this. Not everyone is winning, but we're here to make sure that everyone can learn how to trade properly, okay? So thanks everyone for joining. And you guys on YouTube, guys, you guys are part of this family as well. We understand you're not in the Zoom room and things like that, but we're still here with you guys live every single day, giving you guys the same thing we give our members, okay? So we do appreciate and respect you guys as well. You guys are the reason why we're still here on YouTube. You guys hitting the like button, subscribing, helping the growth of the channel. We're here for you guys. We had a mission from day one. It was hashtag pay it forward. We pay it forward to you guys. And we hope that you guys can pay it forward to someone else. You guys paying it forward, you don't have to sign up with us. We're not asking you to sign up with us. We're asking you to hit the like button and subscribe, because that is paying it forward to someone else who's looking for trading right now. YouTube can get in that algorithm, and the way how you found us was someone hit the like and subscribe. That's how you found us. And if we're helping you with your trading, think about helping someone else. It's good karma. You will have good karma. That's the whole reasoning behind paying it forward. Okay, so Canva Vlog, thank you for joining. GG Skills, Sanity, thank you for joining, brother. I appreciate you. Long time. Let's learn together. You're right. Sir Ghosh, welcome. Good evening. All the way from India. Welcome, brother. Ahmed, welcome. I hope you're feeling good. Let's go, guys. Okay, so let's get into it. So starting on the daily, first thing is obvious zones and pivots. Start from the highest and the lowest. Just go with the most simplistic right there. That's the highest point, this. Now, is it an all-time high? Yes, it is. This could have been like a monthly high, and maybe it could have had a higher all-time high, but this is the highest we got. We know 5,600 was all-time high. And then a zone, real simple, use that line as a point of interest and just bring it down to those bodies. That's it. You've done a job that took me years to learn how to do right there, okay? And you see how simple it is? Now you just move it into the future. And then see when it came right back into that zone, lower high, the sellers are there who sold this leg down the all-time high, and you can see there's like the second top and dropping, okay? But now gold found a nice bottom. So you see we're curling back up. And I'll show you the box, the demand zone. I've been showing you the last couple days how we've been bouncing off that area, okay? So now that we found a nice big red box above us, let's find a nice green box, the opposite below us. So what I do is very simple. I follow this high, I continue to come down, I come down, and then it came right there. That's the lowest point. That's where it stopped. That's what we call a pivot or a point of interest, okay? And then there's different pivots where there's bodies of volume, and then there's wicks. This is telling me that's how low it went, but it did not close down there, just like this day right here. That's telling me how low it went, but it did not close down there. The buyers brought it right back up. That's what's called a rejection. It's just like playing sports. You know when you play basketball and you go to dunk on someone and they reject you? It's the same thing, okay? It's the same thing. So I mark that up. I'm not using orange line. That's not an all-time low, okay? Remember, I use orange, Donald Trump's face, for an all-time high, his makeup. That's not an all-time low, so that has to be a yellow point of interest. Now, every other daily point of interest I use is a yellow line. I want to make that clear to everybody. You can see on the disclaimer at the bottom of YouTube, you see there where it says SST, it shows you there the colors. So it's there, color coordinated. I color coordinate my chart. Did I learn this from someone? I'm telling you the honest truth. No, I do this for myself. Whenever I see a red box, it tells me there's sellers. If I see a green box, it tells me there's buyers. Whether you want to call it a red box resistance, supply, or sellers, I don't care, okay? This is where a lot of traders get confused. Ron, is this a resistance? Is it a supply? Is it this? Is it that? Who gives a shit the name of it? Just know that it's a red box. Red box is sellers, okay? Because if I break down resistance and supply, it's going to go over your head and it's going to get too complicated. I want to teach things very easy. Like I said, I teach my children this. I'm not at the point where I'm teaching my nine-year-old daughter what is resistance and supply. I teach her a red box. She understands that those are sellers. Okay. As she gets older, I'll get more advanced with her. She's not there yet. Right now, I gotta make sure she understands a red box, green box. Okay. Same with when we find a green box. It's whether you call it support, demand, buyers, whatever you call it. Just know that that's where the buyers could be waiting, okay? So now that we found that point of interest, now what I do is I look for the zone below it. And how do I do it? You gotta look back, right? You gotta see the last time when we were coming up, that was a previous all-time high on gold. And you see, this is we had this the other day, a 5-minute scalp where I told you it was a 4-bar play, a 4-bar M pattern. See this? Blue candle, black candle, blue candle. There's the black candle, drop. That's an M pattern with 4 bars. Okay, we had this scalp the other day where it dropped with 0 drawdown and 100 pips. We took it, I think it was yesterday or the day before. No, it was a Tokyo session. It came up, down, up. There's the second top. There's the second top with the traditional more volume. There's the flag and continue dropping down. But you notice how the buyers stepped in here and it produced a double bottom there and came back up. And then when it came back down, it came into the point of control right there, stopped, found support, and came back up. Now the volume closed above that yellow line, it turns to support. But you see, it broke, but there's a zone right there. See how it flagged? So I guarantee you that zone will correspond with this zone over here. How do I know that? Because I've been doing this since October, right here. From that yellow line, box in those 4 bodies. You know, when I tell you guys it takes 2, some of you guys listen to what I'm saying and some of you guys do not listen because your guys are just saying, Ron, buy gold, sell gold. I'm trying to teach you how to do this for a lifetime, right? So when I tell you guys it takes 2 bars to sometimes understand where the volume is consolidated, right there, that blue bar and see the black one, you could come in right in there. And you see, if you just grab those 2 bars, you can see it's barcoding, blue, black. Look at the third bar. This is like how you back test. Third bar, blue in there. Then the black bar came down and it's an M pattern and there's the volume closing below that zone. So that zone, I'm stretching it into the future. And then you see when it revisits it right there, again, pushes back down, but it's making a higher low off the bottom. So the buyers are still there, pushing it right back up, but we have not broke this red box yet. Then again, it comes in, consolidates in there. These are daily candles, okay? These are daily. So it traded in there 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, almost a week and a half, okay? And then finally, there's your confirmation. That's your confirmed candle. This is not an impulse. It was an impulse while it was breaking out, but the volume confirmed closure. Guys, I can change your trading overnight if you stop trading on impulse candles. If you just wait for the body to close. I'm saying this, that I can pretty much guarantee you can improve your trading right now. Everybody on this call, okay, can improve their consistency if you just wait for bodies to close. Why? You will not be faked out. You have now confirmed volume, and then you can patiently wait for the retest at the point of control. Is that going to work 100% of the time? No. Will it work about 70% of the time? Yes, that's called a high probability in trading. And then if you trade with the proper risk management after that, you're looking for high probable trades with the proper risk management. That's a winning solution for everybody, okay? If we continue to trade on impulse, we buy that, and we do not know how to trade an impulse candle or know what we're looking for. When I'm trading an impulse candle, I've already measured where it could go. So I know, like the other day when I traded on impulse, when it moved 100 pips to the next 5-minute resistance, that's where I knew to pip and dip. I don't play games, guys, okay? I don't play games like that. So now when we continue, what we're doing here is when you get your closing confirmed candle, okay? That closes, showing me the buyers are in control. Now that zone turns green to complement that buyers. And then now it's telling me that this zone could be filling with pending buyers waiting to buy that pullback. So yes, it does move out, move out, move out. And if we got excited, FOMO trading, continued to buy the highs, we bought up there. Look at there's equal high wicks, and then they brought it right back down. These traders were very patient, disciplined traders. Okay, I can tell because they waited for it to come back in the green box, came back up, closed above. Okay, there's another confirmed candle. And then look, even if they didn't buy the next breakout, look at how naturally it came right back down to that yellow line. And then that's like a second bottom, right? There's the first move coming out, and then there's the second bottom. There it is. And then it comes back down, and there's the big volume. When we say the second bottom has traditionally more volume to move out, guys, we say that because we've seen this pattern over and over and over. The first one is, it's nice, it's a good buy, but then when it comes back, it's picking up the institutional orders. It's picking up, have you guys heard of smart money? It's picking up the patient, disciplined retail traders. It's picking up the traders who understand how to trade. Do you guys understand what I'm saying by that? So if you guys can learn how to do this, I'm not going to say you're going to be an amazing trader right away, but at least you're working your way from just trading a first leg breakout, impulse candles. You'll have more success doing this. And how do we learn that? You have to teach yourself patience and discipline. You might have to wait, even on these calls, in 5 minutes when it breaks out, and I say, guys, I'm waiting for a pullback, and I know that the call is only maybe another hour or 90 minutes, and I know that it might not pull back in that hour. I know it might be after the call. So sometimes I'm forced to take trades that I really don't want to, because sometimes we get on these calls and then we don't take a trade, and then you guys unsubscribe from the channel and say this guy sucks and shit like that. But you got to understand, I have your good intentions too. I want to wait for those pullbacks. I don't want to just buy FOMO or trade on impulse and just go up 20, 30, 50 pips and then get stopped out. Okay. It's not what we want to do here. We want to learn patience. So, and then I know if there's no trade during this session, there'll be a trade on the next session. You guys got to learn that too. If there's no trade right now for the next 2 hours, don't think you have to force trading. Come back in Tokyo. If there's no trades there, try a London session. If there's no trading there, come New York session. If there's no, you can work around your schedule. Like I said, markets are 24 hours. I know we have busy lives. Someone says to me, Ron, I have a busy life. I have a busy life too, believe it or not. I'm married. I have kids. I have other shit I do. I don't just trade for all day. I have other things that I do that generates income, and I'm not just sitting at the charts all day too. I have a very busy life myself too, just like you guys. But you can figure out around your busy schedule when to trade. It takes sacrifice. I used to trade London. I hate it. It's 2 a.m., 3 a.m. in the morning, but I had to at that time. And I did it for 2 years prior to being on YouTube. And this was back maybe 15 years ago. I used to trade that session for 2 years straight. I had to at that time. Did I want to? No, but I had to sacrifice my sleep to do that. And you guys got to learn sacrifice too. Trading is not just a job for, people who think that they do this that's it, that's all they do. There's a lot of traders in our group that work, go to school, and they've learned how to trade on the side. That's why having realistic goals, you can achieve that, okay? So you see this zone. Now, if I just want to clean up the zone a little bit, I'm going to maybe complement it more, towards those bodies. I stretch it now, I continue into the future. So I see that drop right there. The green box is still holding back up. Look at now. So you see the big drop was Monday. It was coming down from London. And then 7 a.m., 7:03, this was going to be, guys, have you ever heard of Black Monday? Black Monday was a day in 1987 and other days in the 2000. It was when a Monday opened up and it was a massive black candle. And that's what created the stock market crash. Okay, I don't know if you guys know your history of the stock markets, but that's what's called a Black Monday. It's a big black bar that closed and started the drop of the markets. Okay, this could have been a Black Monday. It was breaking through this support, and had we closed down there, this would have been a big red box, and it could have been coming down to take out this double bottom right there, and then that's where we would have had the big market or gold collapse right there, okay? And that would have been under Trump's watch, right? And what's the thing that he always says? Stock markets is everything to him. Stock markets are all-time highs. That's what he says. That would have gone again. And then just conveniently, he made a tweet at 7:03 that negotiations were all good. Everything was good with Iran. The market took it right back up. And look at, we're recovering right now. So this is now, but the damage was done on that candle, right? It came down there. It hit a lot of pending orders, stop losses, all of these longs right here. They could have been stopped out. So now that we know this, that's one bottom pivot. Okay, it's like a V bottom recovery. Stretch this into the future. Okay, we don't know how high this move is going to move up right now. Okay, see how it stopped? It's moving up. Okay, we still have a big black bar, big black bar, big black bar, and all the way up here and the all-time high. Let's say it retraces right up to here. Okay, and we pull back down. Okay, that could be where it breaks, just like a 5-minute setup. If it breaks, it's filling that wick and we could close below there. Then that could trigger gold selling. However, if it comes back down here, we know where the double bottom could be, somewhere right around here. And double bottoms traditionally have more volume. So what happens if we're coming? There's our neckline. Then we could potentially break out and come back to the all-time high of gold. When it comes up there, will it break out? I don't know, depending on how the volume is. It might just come back up there and come back down, right? So I trade from zone to zone, from point of interest to point of interest, just like I do when I'm scalping 1-minute candles or 5-minute candles, the same shit, okay? So now let's continue. Everyone okay with this? Okay, are we learning? If you're learning, hit the like button and subscribe to this channel. If you're learning something, okay? Only 3 people are learning out of the entire call. And now let's follow the wick. Okay, you always got to follow the wick because the wick will take you to the next point of interest. It's going to take you where the next body closes and the next body opens. Okay, so follow your wicks. Whether you're in the trade or not, I'm not asking you if you traded it. I'm asking you to analyze it. Okay, so right now, when you're not in a trade, you should be analyzing. I analyze more than I trade. I analyze more than I hit the buy and sell button. Okay. But my analysis, spending more time analyzing, helps me become a profitable trader. I don't think a lot of people are understanding that concept. Everyone just wants to trade, hit the buy and sell button without analyzing. And then they're scratching their head and saying, Ron, I don't know why I suck at trading. Ron, I don't know why I can't make money in trading. Ron, I don't know why I'm constantly losing. And then the first thing I ask is, all you're doing is hitting the buy and sell button without analyzing. It doesn't take a genius. It doesn't take a rocket scientist to understand why you're losing. It's just common sense. You're not analyzing. How do you expect to win, right? You got to know what you're doing. This is a job. This is a skill that you need to learn, okay? And I'm trying to teach you this, right? You can learn from other mentors. I don't care. You can learn from other coaches. That's great. But this is the way how I teach, okay? This is the way how I want it to be taught, okay? I'm telling you guys, I like tough love. I love it. One of my mentors growing up was Steve Morrow from Beat the Market Maker. He was an old school New Yorker, and if you screwed around in his class, he would tell you, get the fuck out of here. Straight up, like he was gangster. He didn't screw around. I love that about him. I sat and I listened to every single word he was saying. And then he would call you out if you were not listening because he actually beat a market maker. Like, do you understand what I'm trying to say to you guys? He was the one back in the early 2000s that taught me what a market maker was and how to beat the market maker. And he did it not by being a nice guy. He didn't do it by sugarcoating shit. He told you how it was, and I love that about him. That's how I teach. Hate me or love me, I don't care. Okay, I'm not here to be your best friend. 99% of you guys are strangers. I don't even know who you guys are. Okay, other guys in Zoom, I know who you guys are. I love you guys, but half of you guys, more than half, are strangers. I have no idea who you guys are. Okay, so your opinion means fuck all to me. Okay, but I hope you guys are actually learning something. Okay, so follow that volume. Now this is when I say you gotta understand where a candle closes and opens, okay? I don't just say this to say this. I actually mean this. That dictates where the market maker closed. that bar. And that bar on this situation is a daily bar. That's 24 hours of volume moving up, down, and sideways. That's where it closed. This could be a 5-minute candle. This could be a 1-minute candle where it came all the way down and came right back up and closed there. Now we mark it as a point of interest. Okay, see where it closed? Now look at how the next bar opened. Learn what is an ignited bar. Okay, because I promise you it will transform the way how you look at trading and candles. Okay, I love price action. If you want to learn price action, I will teach you price action. This is what I'm passionate about. I learned this myself. I can't attribute this. If there was someone who taught me this, I'm more than happy to say their name. But I didn't learn this from anybody. I taught myself this shit. So that's why it's so easy for me to teach this live, because I taught myself this shit. So I have no one to, there might be other traders that think they know price action. They go live, they make a couple mistakes, they don't know what the fuck they're doing, and then they fall back. I don't fall back. I know, I've seen this shit for over 25 years of my life. So I can do this, no problem. I can teach this like the best of them. Look at it. It came up and closed. That's a bullish ignited candle. First thing I say is, look at it. It's engulfing, okay? That's an engulfed structural bar. Cut it in half. How many times do I tell you guys, cut it in half? Listen to that song by Young Dolph and OT Genesis. That should be your theme song when you're trading in the background. Cut it. When price gets too high, what do? We cut it. When price gets too low, what do? We cut it. Cut it in half. That's the most basic thing in trading that anyone can teach you. If you don't know how to cut a bar in half, I don't know how else to help you, okay? So cutting it in half, I can do it when I've smoked an ounce of weed. I can do it by just looking at the candle and cut it in half. That I don't suggest that, okay? I don't recommend to smoke an ounce of weed and just eyeball and cut it in half. But I have to do that because I scalp 1-minute candles. I don't have the luxury to pull out my fancy tool, Fibonacci, and do this. I got to move fast. 1-minute candles close every single 60 seconds, okay? If I'm trading a daily candle, a 4-hour candle, an hourly candle, a 30-minute candle, a 15-minute candle, a 5-minute candle, I have all day to figure out the exact locations. So what do we do with that bar? Okay, let's not guess. This is going to teach you guys. Now listen, if you guys want to learn how to figure out a POC, a point of control, grab your Fibonacci tool. That's this thing right here. Okay, we put it at the opening price. Okay, I get a million questions. Ron, why don't we do it at the wicks? I don't know. Okay, just do it how I do it. Okay, that's it. A long story short, just do it like this. Okay, if you want to do it at the wicks, go and do it at the wicks, and you do your own analysis, you do your own back testing, and learn from that. All I'm saying is, if you do it at the wicks, stay consistent. If you do it on the daily wicks, do it on the 4-hour wicks, do it on the hourly wicks, do it on the 15-minute wicks, the 5-minute wicks, and the 1-minute wicks. I don't do the wicks. I do the body, where the body opens and closes. Why? Because that is more confirmed volume, and volume is the real body. Volume tells you everything, okay? The wicks are very important, but it just tells me the range, okay? No volume closed down there. I see it came down there, but no volume closed there. I see this black candle closed there. I see it open there. I see this big blue one opened here. Plot your Fibonacci right there and bring it to the closing price. Okay, so your Fibonacci is going to have some fancy numbers right here. It's going to have a 236, a 382, 0.5, a 618, a 786, and a 1. Okay, you guys understand that? This is not me making these numbers. This is the Fibonacci tool. Okay, and you can reverse it where the 618 is replacing the 382, whether you plot it from bottom top, up, down. Okay, you got to know how your retracements work. Easiest way, because a lot of people get confused on retracements. Okay. What is the first discount when you're buying or selling something? 23% is the first discount. Okay, then the next discount is 38%, 0.5, 618, and then 78%, and then 1. If we're going down, if I plotted it from the top to the bottom, what is my first discount? It can't be 78%. That makes no sense. So we've got to go to your settings and flip it and reverse it. This should be 23.6. This should be 38, 0.5, and the 618 should be down here. Does that make sense, guys? Okay. That took me a long time to learn that, believe it or not. Okay. How to understand how these numbers worked. But you just look at it as like when you go shopping, your first discount is 23%. Then the next discount is 38%. A great discount is when we get shit in half, cut in half, 50%. A better discount would be getting it at 61.8%. If I can go buy a pair of Jordans and they give me 80% off, oh fuck, I'll buy 10 pairs, right? So you got to know, and it's a deeper discounted, or if you're selling at a premium area, okay? That's not what I'm teaching right now, but that's how you learn about Fibonacci, okay? Now, there's the 0.5. Let's cut it in half, right? Guys, sorry that these sessions now turn into education, but I know if you learn this, how well you can do in trading. And someone's saying, Ron, gold is moving, gold's moving. Come on, we got to be scalping. Guys, I'm telling you, you can scalp the rest of your life if you just learn how to do this, okay? I'm not playing games, guys. I'm not a person to waste your time. I value your time, but I value this education as well, okay? Because I know if you're locked in, I can teach this shit to you real fast. Like this took me on, I'm not lying to you guys, 10 years, 20 years of my life to master this shit. And I'm not saying that to be cocky. I'm saying it because I put a lot of work into this. I lost a shit ton of money, and I finally figured this out, and I've recovered all of my losses, and I'm doing good. And I know that you guys can do this too. I know some of you guys are struggling, but just learn how to do this, guys. Look, when I cut that in half in 0.5, look at the number, okay? When I always say, guys, when you find a point of interest, look at the number. Is it just by chance that that number is 4,800 on the dot? You guys tell me, because I was questioning myself for years when I started to see this. Is it just by chance that we cut that in half and it's exactly 4,800? I started to learn then what is an auction. What is an auction theory? This is a live auction. Then I started to understand why the volume trades at these psychological levels, because that's where the big orders are. The smart money is waiting at those psychological numbers. The smart money is not trading at just anywhere on the chart. It's trading at these psychological numbers. So if you pinpoint an exact point of interest and the corresponding correlation is the exact psychological number, you've killed two birds with one stone. Then you know exactly you're doing what you need to be doing, okay? And if you can do that, I'm telling you, you're doing exactly what you need to be doing, okay? The only other thing is, let's find the zone now, the point of control. That just gives us exactly 50%. So the point of control is this line above and the one line below. Whether it's the 618 or 382 is how you have your Fibonacci set up, okay? So it's right there. Because we're gonna learn how to do the point of controls on hourly, on 5 minutes and 1 minute candles, depending on whatever candle you want to trade. So that's how you do it. So long story short, I just taught you now how to do a point of control, okay? And then the only other thing you got to do is stretch it into the future, because if it ever comes back into that point of control, it could still be with buyers, okay? And then the only other thing is, so now I see when it retraced right back down, it came back down. Look at the volume stayed in that point of control. Yes, it did break, but the volume was in there. It pushed back up. It came, rotated back down, still respecting this, and continue to go up. Now, if you stretch it into the future, you see now that black bar, it didn't just come down and go back up. It closed below it. So the same zone, that same point of control, again, just do what I do with the zones. It's black, flip it red, and stretch it into the future. And you see now it's a bearish point of control. Same number, 4,800 above and below. And if it ever comes back in there, look at guys, I'm setting this up for us. You see? Now, see the daily candles? It may revisit this week or next week. That could be where the big neckline is, to push it back down to get us down to either a double bottom or a higher low, okay? So you see, guys, I spent time to teach you this, but I did it for a specific reason, because I'm bringing it into the future where we could potentially be coming up to. So you see how it came down? That's a pattern you recognize. Now it's coming right back up. But for it to come all the way into the red zone, there's this yellow line right there, the body, the wick. It was support there. Now it could be resistance where it comes only up to there. And that's a psychological number, 4650 on the dot. It might come there and go back down, okay? It might just bypass and break through this and impulsively fill that wick. And then we're trading into the bigger zone. And then it might come back down. If it comes back down, this might be support to take us back up. It might fail and then come back down. There's the bigger double bottom to break your neckline. You guys understand? There's your pattern that we're looking for, okay? But we're nowhere near that, but this is how we do analysis. So I can continue to do more shit up here, but I don't want to waste the entire time on this call, but that's another good point of interest you should have on your chart there. And now what we should be doing is analyzing the last few bars, which are, Monday we know Donald Trump tweeted, saved the market, came back up, look at where it closed. Closing, opening, point of interest. I have my yellow line there. It was originally on Tuesday was bearish, 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 came through the green zone, picked up all those pending orders, came back up, flipped, short wick, but you see it didn't break that high or close engulfed. So it was a pin bar. Now, locate where it closed, where it opened. Points of interest right there. This is, now we're going into our daily bar right now. So 4475 psychological area. It opened bearish. How do I know that? Because I can see the little wick. It was black, 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 and that's the lowest point. Okay, so I make a purple line for my low of the day. 4455 is the lowest point of the day. Did it hold up above 50% of this blue candle? Yes. Did it transact in there? No. So it's building a higher low. It came back up. Look, short wick and pop. Who are daily traders? Okay, if you're a daily trader, this is exactly what I look on a 1 minute scalp. This is exactly what I look on a 5 minute scalp. It came down, short wick, filling the wick and popping and doing its job to fill the previous wick. Just if we look, if you took a buy right there, filling the wick, that's 500 pips today just to fill the wick. And it ended up pushing out and going up for almost 1,200 pips. And then now we're finding the resistance and the sellers are pushing it down. Why? Because it's trading into 50% of this black candle, okay? Is that a structural bar? Did it close below those bodies? Okay, that is a structural bar. You notice how this one did not close below those bodies? The next candle came up, bullish, right into 50%. If you cut that black candle in half, I guarantee you, remember, Ron smoked an ounce of weed, and it came right back down and continued to make a low and close. It closed below that yellow point of interest line. That is a structural bar. That is a bar worthwhile cutting in half or figuring out a point of control on that thing. So if I was, again, looking to cut that bar in half, opening volume, closing volume, cut it in half. How do I know where the half is? 0.5, make it a yellow point of interest line. You could even find the point of control of that bar. It's a structural bar, okay? One line above, one line below, it's red, stretched into the future. So now I see that today we impulsively broke, created that high, but look at where it's rejected in the point of control of this bar. So I stretched this into the future. Now the job of the buyers is to continue to come up this wick and potentially close today above there. If they do, I will change this red zone to a green zone, but only when it closes. There's still 5 more hours to go into the close. So right now it is still a red zone. Okay, now let's follow that volume. It came cut through here. We created a high of the day. It's right there, purple line. Look at the number. Guys, this is right now live. Today's highest number, 4,600 on the dot. Are we surprised that it's getting pushed down at exactly that psychological location of 4,600? I don't know about you guys, but I'm not surprised. Okay, because I know psychological numbers. Look at the next psychological number above us, where the body closed and opened, 4,650. If I told you guys I can trade without even looking at charts, no, not one of you guys would believe me. But I'm telling you, if you guys just told me a security, you told me the trend, you told me how much it costs, I could just spit some numbers out at you and pretty much I will know your points of interest without even looking at a chart or doing analysis. Because I just know how an auction operates, okay? So now look, that might be the neckline. That could be the neckline where it came up, it bounced, and then what happens if we close below that and then we start pushing back down, okay? So when we push back down, I don't know, is it gonna just continue to break like that? There's levels we gotta get to. We gotta break, here, That might be a higher low where we pick up buyers and continue to move up. It might close double bottom. It might close back below here and then push down. So if you're on the daily or swing trader, you need to be following this volume, okay? So on the daily now, we've done some daily analysis. It's still on a big drop, okay? That's a considerable drop. Another thing what you can do is, okay, see this big wick where it dropped all the way down to that big wick? This is where now you can use your Fibonacci tool to understand a retracement. So one thing that you can do is grab your Fibonacci tool from the highest point right there, okay? See that blue candle where I'm plotting it? March 2nd. Plotting it at the highest point, 54.20, dragging it all the way down to where we hit that low before Donald Trump saved Black Monday, right there, just at 4,100, okay? So remember what I said? The first retracement needs to be 23% off. I have 78. That doesn't make sense. So I have to click on my Fibonacci tool, go to the settings right here, and you see this reverse function where it says reverse? Click on reverse. Press OK. Now you see how it reversed all my numbers? Now it's set up correct for retracements. There's 23%. And look at today's high is exactly, I don't know if you can see it, the purple line is lined up with exactly the Fibonacci retracement of 38.2%. Look, guys, okay? Look at the purple high off of that retracement is exactly 38.2, and thirdly, the number is exactly 4,600. That's when we talk about confluence, confluence, confluence. What the hell does this word confluence mean? Okay, some of you guys don't even understand English. So let me make it easier for you. I don't understand English too. I got broken English. I come from parents who are immigrants too. Confluence is meaning I have more evidence that this is, I'm doing my work good, right? I'm multiple confluences is saying I have multiple things that are telling me I'm doing the right shit, okay? So that's telling me, yes, that's where sellers are. That's telling me, yes, 4,600. That's telling me, yes, with the Fibonacci tool, it moved above 23%, but got up to 38, and the sellers are still there, okay? So that's great. That shows me evidence. And then now if we look, there's the 0.5. It's right by my red point of control, okay? If it breaks out and we have an impulse, if it breaks above there, okay, we have an impulse, it fills that wick right there. Look at where it's gonna come to, the yellow line, 618. Okay, we put more emphasis on that. That's where maybe it will come back down if it closes above, or maybe it's a fake out. That's when we know it comes up there, closes back, then we're dropping back down. So this is how you can utilize if you want to use your Fibonacci retracements with your top down. See, if I break this daily point of interest, the 786 is right there. If we come all the way into the red box, there's the full retracement in the all-time high zone from right there. And look at the number. 420. 420, we should all be smoking a joint if it gets up there. Because if we're in buys, we should smoke a joint and do something. Maybe have an 80-20% rule, okay? And then leave the rest running. So we have a long, long way to get up there. But you see, we got to move in levels, okay? Before we come all the way to the all-time high zone, there's retracements. We still are failing at 38.2. How the hell can I go up here when we're failing right here right now? So stretch all of these into the future, right? Put some alerts at these locations, okay? I'm going to set an alert at this yellow line. Right click, add an alert, okay? This is what I'm saying. If you've got a busy life, if you're working, if you got kids to watch, whatever the hell you're doing, you can have an alert come to your mobile or your laptop. If it gets there, you get an alert. That doesn't mean you buy or sell blind, but you get an alert. It's at your location. You can have another alert right there, right? You can set your chart up. I do a top down every single day with you guys so you guys can learn. The best strategy is on Sunday, spend a half an hour, do what I do, and keep these lines all week. Keep them all week. Just watch how the 5-minute volume or 15-minute volume or hourly volume trades at these locations. There it came up, double top. There's the volume close below. There's your drop. There it came back up, but you see it's a lower high from here. So the offers are coming back down. See, I can see rejected right there. We're still working our way down. So we might be coming out of this big red zone on the higher time frames and ready to sell these 5-minute candles back down to this line or back down to this purple line because I know what those lines represent, okay? I'm not on the 5 minutes yet, but what I'm saying is you can trade off of these all week and look for high probable setups. You don't have to trade this shit down here. You can wait for it to tag yellow lines. You can wait for it to tag white lines if you're doing hourly. And you can measure the distance so you know exactly how much money you can make. That's why I measure things, so I know exactly how much money I can make. My life is so much easier when I know how much I can make, get in, make my daily goal, and get the fuck out because I got other shit to do. I want you guys to learn that too. You don't have to sit here all day and stare at these candles. Set your chart up. Your charting will pay you if you do a good job charting, okay? So back on the daily, now what I do is I move to the hourly. You can go into the 4-hour, okay? There's 4-hour candles you can dissect. There's whatever you want. You can see right now, there's a 4-hour move that came down, right? There's the point of interest on the 4-hour candles. There's the neckline on the 4-hour candles. There's where it came down. That would have been a double bottom, but that's the higher low double bottom in the daily green box. You see, it came back up. There's a 4-hour candle that closed above. Look at the retest, and there's where it started to fly out at when the day opened at 6 p.m. Came up, and look at the retracements, guys. Did anybody, please, I pray to God, and if you didn't, just say yes, you did. Make me happy. Did anybody on this call find the point of control of that closed 4-hour candle? Please, 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 please. It will make my day. If someone, even if you're lying to me, just say yes. Just so I don't get upset. You did it, dude? Okay. So, guys, again, well, let's just refresh our minds here. This is a structural candle. Why? Because it closed above the neckline. It closed above this wick, this wick. That's a full body candle. It's not like these little ones. So that's a great candle to analyze. That was a 4-hour close and it closed. Okay. So grab this is another thing. Let me show you guys here. Let me show you guys something. Okay. See this? See the Fibonacci tool? If you just want to make it to just look for points of control, watch how I do this. Okay, so you see where we were using the point of control, the Fibonacci with all of the numbers. Okay, if you want to make it real clean like this, do this. Click on it again. Okay, see now what we can select? We can select all the retracement levels, all the ratios. I don't need the 0 because I know to plot it from the open of the candle to the close. If it's a bearish candle, from the top to the bottom. Okay, I don't need that. Okay, so I get rid of it. I don't need the 236. It's irrelevant when I'm looking for a point of control. Get rid of it, okay? I need the 382. I need the 0.5 because the 0.5 is the cut line. I need the 618 because that's the one line above, one line below the 0.5. That gives me the point of control. I don't need 786. Get rid of it. I don't need 1. I don't need 1.618. All I need, guys, listen, take a screenshot of this and write on the screenshot, this is Ron's point of control. We only should have checked off 382, 0.5, 618. The colors you want to make, I don't give a shit what colors you make them. Make them a rainbow. I don't care, okay? Just make them, just so you understand. I'm not about colors, okay? I don't give a fuck. This is yellow. Someone will say, Ron, why is this black? Why is this black? Why is this yellow? Who gives a shit the colors? Just understand that this is your point of control zone, okay? That's it, right? It can be either a neutral consolidated zone, it can be a green bullish zone where it's buyers, or it can be a red selling zone. Got it? Okay, so you see now how I've set up my Fibonacci now where it's going to just tell me exactly where the point of control is. Okay, so, oh shit, I didn't want to move that. So that 4-hour candle, for example, when we're doing this, okay, that open, close, okay? So notice it's not a daily candle. All candlesticks have the same characteristics. I'm doing it now on a 4-hour. Open, drag it up to the close of that blue candle. Very easy, right? There's the 0.5. There's the point of control. Let's do it on this 4-hour bar, okay? For 4-hour, again, hourly, H, okay? So 4-hour and 1 hour, I use a white line. Even if I was to do a 2-hour or 3-hour, anything within H, I use a white line. so that when I'm going to the lower time frames, 1 minute or 5 minutes, and I see it's tagging a white line, I know it's hitting an hourly line, it's not hitting a daily line, okay? And I place more emphasis on the higher time frames. So yellow is higher than a white line, okay? That's what I do it, okay? And now that point of control, it's just those lines right there, okay? And it would have been a green zone because it closed bullish. Had I done this at the opening of the day and stretched it into the future, that was a black candle, came right in, back up, closed above. It ended up opening and pushing, that was blue. So if you caught that continuation, you made some money, but you're not getting through the big red zone above there, okay? And look at the equal highs. So guys, I can turn this call into a full education session, but guys, learn what are equal highs. Okay, that candle closed 95%, that 4-hour candle right at the high. It opened blue, it came up blue, 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 and it could not even break that wick. That's when I call bullshit. That's when I call the market is here in this situation, it's manipulated. So they have more sell orders, more offers at that exact location to hold it down. Because if that broke out and just created a new higher high, that would have changed everything that's going on in this green box down here. So that allowed it to come back down, pick up those orders and come up. The buyers were strong on the continuation. That was a blue, blue, blue 4-hour candle, came in there, lower high. The sellers are bringing it right back down. Then it came back down. It broke that low. We're still in the green zone, but created a new low, closed as a bearish 4-hour spin top. Next 4-hour candle, this is now open. It's going to close in less than 2 hours. It opened. It was black. Black, black, black. Still see it, still holding this point of control. And it's coming right back up. Again, it came up right up to our daily yellow line, and it's a lower high. And it's coming right back down. So we are consolidating on the 4-hour volume. Okay, you can continue to stretch that zone if you like in the future, but it's a lot of zones we're going to have. Okay, but you see, and look at the pattern. You see it came up, came back down. This is the neckline. Can it come back up? Yes, it could break out. But right now we got a lower high, still in the red zone. It could be continuing to push down, and then it breaks. Then it's a big black selling candle coming all the way down here. Okay, if it closes below there, you make that red zone, and then it could take us back down to opening price or the low of the day, and then continue to drop down. Okay, so that's how we're trading on the 4 hours. Okay, I can't change the 4-hour candles. This is how it's moving. And each 4-hour candle, you should know what it is. 6 to 10 p.m. is the opening 4-hour candle of a daily candle. Next candle is 10 to 2 a.m. leading into pre-London. This candle represents all of London, this 4-hour candle. This was London from 2 a.m. to 6 a.m. This candle now represents pre-New York going into 10 a.m. So this covers everything from pre-New York, COMEX, and the first 30 minutes of Wall Street. And then this next one is from now 10 a.m. to 2 p.m. and it will close. And then the final bar will be from 2 p.m. to 6 p.m. where the daily candle closes and a new daily candle opens up. That's a 24-hour cycle. You got 4 hours, 8 hours, 12 hours, 16 hours, 20, and the final bar will conclude 24 hours, okay? So that's how you understand each bar. And you got to understand what each bar, when it opens, what it represents, okay? So if I'm scalping and I know it's 2 p.m. and I'm trading gold, I know that that's when a 4-hour candle is closing and a new 4-hour candle is opening up. So when I always say, guys, watch, guys, the new hour, new 4-hour, it affects volatility and volume. I'm saying that because I'm going with the higher time frames. Some of you guys don't understand why I say that. Some of you guys, when it's 1:59 and I say, guys, I don't want to take a trade right now, regardless of the setup, because I know a new 4-hour candle can come in and disrupt the flow of the market and can change the entire momentum. Do you guys understand when I'm saying that? Why I do that? Okay. Because hopefully I explain it to you guys when we're live scalping, but for some of you guys don't understand, remember, you gotta know, like, trading is a job. Some of you guys go to your job every day and you can do your job with your eyes closed because you've been doing it for years. This is a job for me too. I can do this with my eyes closed too, not because I'm cocky or I'm showing off. I'm telling you, I've been doing this for 25 years. So I should have a little bit of experience that I've learned over those years. Okay, I started trading when I was very young at 16. I'm 44 now. But when I say 25 years, from 16 to 20, I had no idea what the hell I was doing. Okay, I started to take it serious at 20, but still didn't know what I was doing. Finally, when I turned 25, I figured this game out. Okay, and for those years, I've been doing good. But that's why I want to teach you guys. I want to teach you because I know teaching you can get further in life. If I just give you a buy signal, it's fun. We do that. You can make 100 pips, 50 pips right now. But what happens if I'm not here tomorrow? What happens if I'm not here? Like, YouTube shuts us down or something like that. Then I'm telling you, you can get further in life by learning, guys. Education is knowledge. Knowledge and education is power. And that's where you're going to get further in life. Okay. I never took a signal from anybody in my entire life. Never. I never even asked anybody for a signal because I was always fascinated to learn how to trade. I didn't want to rely on people for signals. I wanted to learn how to do this. I believed in myself, just like you guys should believe in yourselves too. Okay. So the lazy approach is just begging someone. Okay. That's the lazy approach in life. I know a lot of you guys don't want that. You guys want to learn this. So that's why I take my time to really teach this and break this down. We're going to have a lot of fun sessions together in the future. Believe me, we're going to be scalping these markets. I'll go down to the 1 minutes if you guys want, but I understand that the volatility is too insane right now. And I know that you guys are trading with some shitty brokers right now or shitty prop firms. So I know that you're not going to get filled where I get filled. So it's not going to make sense to do that. I can break down the candles, but to live trade them, I'll be in profit and you'll be in drawdown. It makes no sense to me to do that. That's why I stay on the 5 minutes. Okay. So you see the 4-hour candles. Okay. You can recognize patterns, what they're doing, but we're struggling right here. The volume is consolidated. Okay. Now when we move into the 1 hour, okay, we had some pretty big hourly bars. Here's a nice, see where it was just blue, black, blue, come back down, low. This is a structural bar. Okay. After this call, if you can't recognize a structural bar, then I know that you're not really learning, okay? Because this is so easy to recognize, okay? Look at how it opened and closed above this entire section, like right here. If I was to trap all of that volume right there and just make it neutral, this is maybe what you can see, what is a structural bar, what Ankh is trying to teach you. You see here where the volume just came up, back down, came back in this box, came up, back down, came in this box, back up, back down. But this candle didn't just come up and go back down. This candle engulfed and closed that entire zone. So when Ron says a structural bar, that right there, when you hear the word structure, some of you guys trade those concepts, break of structure. Is that not a break of this structure? Okay. I don't use that term break of structure. I just look, it engulfed and closed above this entire zone. Okay. Some of you guys use that change of character, break of structure. That's another strategy. That's fine. I'm not knocking it. I just don't trade with that. I'm just being honest with you guys. However, if you guys recognize that that's a break of structure, perfect. Then we're aligning ourselves together with my strategy and your strategy. Let's continue to feed off of that. Let's continue to learn. So with what I do, I don't know if you guys do this. I'm telling you what I do. When I see that type of bar, first thing I do is grab my Fibonacci. Just like I found a structural bar on the daily, we found that 4-hour one. Now let's find an hourly one, okay? Easy peasy, same shit. Grab your Fibonacci, open, and close, right? So it's telling me exactly, there's the 0.5 and there's my hourly. So let's continue to do it. Hourly white line, 0.5, okay? And then I look back, oh, it was the resistance, okay? Now it can potentially turn into support. If gold ever comes back down at 4436, I might be looking to buy that. Why? Because I see this breakout candle was yesterday at 4 p.m. when there was news, okay? What caused this entire move? There was news. We were talking in our commodities channel. Someone said, what the hell happened there? That was where they were saying that there was going to be peace negotiations in Iran. We can't help news, guys. And when they do it, we were talking, they do it at strategic times when the markets are closed. Because if there was a lot of sellers in long sell positions and they're holding overnight, that's it. One news announcement and they're stopped out and they're liquidated, okay? That's why I don't like swing trading Forex, because then I have no control overnight. That's why I like to do intraday trading, pip and dip, make my daily goal and get out of the markets, okay? The only securities I hold overnight are long-term stock and options, like Apple. I've been holding Apple for 20 years now, okay? I don't think Apple is going to go bankrupt overnight or be really affected by the war, okay? I think tech is the future, so I thought of that back 20 years ago, and I'm still holding. That's my retirement, okay? So I'm not gambling with my retirement. But Forex, hell no. I don't like swing trading this shit because anything can happen out of control, okay? I monitor my trading in the day, okay? And then I like to get out, whether it's a winning day, losing day, or break even, I sleep well at night, and then I trade the news the next day. Because what I do is this, okay? I was not in that bar, but what I can do is cut it in half. I can find the hourly point of control of that right there. There's the zone. I make it green, sorry. Dennis, scalping is the best. For me, it is. But for you, it might not be. I'm not trying to make everyone on this call scalpers, okay? But I'm trying to show you what I do scalping, you can do on any time frame, okay? Like I'm showing you, I'm breaking it down from the daily to the 4 hour to the hourly. I will get it down to the 5 and 1 minutes. I will be doing the same exact stuff I'm looking for on these because candlesticks have all same characteristics, okay? So you see now that green zone, I stretch it into the future. See that white line? I'm going to place an alert there because if it ever comes back down there, it could be like looking like it wants to sell down. If it comes in there, that might be a great opportunity to look for a buy. Why? Because I see since it broke out at that big news, 4 p.m., it did retrace right down to there, but it made a higher low and continued to go. So you see this zone, whatever you guys call it, fair value grab, fair value zone. I don't know what you guys call it. I call it point of control. It has not been, another word you guys say mitigated or whatever. I say transacted. Transacted. I have an auction brain. So it has not transacted in there. So if it ever does, there's pending orders that have maybe been piling up because look, let's count the hours, how much it's moved away from this block. 1 hour, 2 hours, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay, so it's been 19 hours now, almost 24 hours is a whole day that it has not came in here. But that's not to say that tomorrow it might come in here next week. But if it does, I have my alert ready because maybe it will pick up those orders, build off of this higher low, higher low, higher low, and come right back up to here or break out for a new push. Okay, so if I'm patiently waiting for as an hourly buyer, that's where you got to be waiting, or you got to wait for this yellow line. Because there was a point of interest and it respected it, it could come back down into here and not come into this, okay? It might be a higher low there or a higher low here, okay? But that's where you want to kind of be buying, okay? And not just buying, it could be a sell zone. What if that black volume comes down really hard, they announce peace around the world and it's coming right through there and it closes there? Then same thing, I turn that to a red zone and I could be selling off of that and continue to sell down with the market, okay? But those are high probable trading zones, okay? That's what trading is. We look for high probabilities, okay? Look at right now, coming out, 12:15, 12:14. Israel's Prime Minister Netanyahu, the military campaign against Iran is in full swing, okay? Look at right there. So there's no peace, there's no negotiations. Look at what's coming right from the Israeli Prime Minister's mouth. The military campaign against Iran is in full swing. So they are basically going against USA. USA and Donald Trump want peace, and Israeli Prime Minister is saying it's in full swing. So the markets are going to be very volatile, okay? So you got to use the proper risk management in trading, okay? So look at the hourly now. So the hourly has built some structure, okay? We can see it came up, one top, that's a top, you can see. Here's the neckline. This is the support. It's coming down here. It came back up. That could have been a double top, could have been a new high, but it's a lower high and they're pushing it. Look, it came down, but when it came down, it went back up. Now we're coming back down. So if we get black volume closing below this white line, right, we could turn this little zone red and it could push us right down to here. Okay, and if I'm scalping or trading that from there to there, I measure it. I'm a tradesman. A tradesman has a measuring tool in their toolbox and their tool belt. Whether you're a carpenter, you do drywall, you do framing, you do flooring, I guarantee you have a tape measure. I'm a trader too. I'm a tradesman. This is my toolbox. This is my ruler. So I measure it from here to there, shows me $45 on gold. That's 450 pips. That's a perfect daily goal, or that's a weekly goal for someone. And then when it comes down there, I respect this yellow line. That's not saying that that's where I do something. So number one, if I had a stop loss, I would be coming down to break even. That's where I like to close 80%. And if it continues to go, it could go down lower. But we know when it comes in here, that's that big zone I'm telling you where those big buyers could be. And if you're up in a sell 800 plus pips, you have to understand how an auction works with transactions. The sellers want to sell down to where the big buyers are. And that's how you close a position. If I'm in a sell, when I hit the close button, it closes because a buyer is buying my position. That's how you realize a transaction. That's how you realize your profit in trading. If I know where the buyers are waiting and I'm going to sell, this is where you get greedy because it can come right in there and you don't do anything. And then all of a sudden, how many times in a trade did it come right back up to where you entered and you're scratching your head after saying, what the hell just happened, right? I go through that on the 1 minute and the 5 minutes. So I could imagine if this hourly trader was waiting almost 1 day to get that trade, went up almost 1,000 pips and didn't do anything, it comes right where those big buyers are and they're looking to buy that discount and bring it right back up. And same thing. If this is a red zone right there and these buyers are buying it up, they have to understand they're trading where the sellers are because they could be selling it right back down. So if you take this buy and you're up 1,000 pips, you got to be doing something here too because you know that that's where sellers are. So I'm not saying you have to close your entire trade, but at least take your stop loss and go to break even, reduce your risk in the trade. We can all trade better. We can eliminate emotions in trading when we're at a break even. I trade good when I'm at a break even because I know in the back of my mind, I can't lose any of my money. And after that, I don't care what could happen. Yes, I want to make money, but my main job as a trader is to protect my capital. Without my capital, I can't trade the markets no more. So if I don't protect my capital, I have nothing. Then you'll say goodbye to Ron. You won't see Ron ever again because I have no capital. I can't trade. Okay, so our number one job as traders is to protect your capital. The way how you protect is if you go in a certain profit, take your stop loss, stop being lazy, go to a break even, and stop worrying about the woulda, shoulda, couldas. Oh, if it comes back down, I get tapped at break even. Okay, I can say the same shit. What happens if it comes back down and you're not at a break even and it comes for your stop loss? And then you're over leveraged and you blew up your account. What about that conversation, okay? You gotta have a real conversation with yourself. You gotta be mature about this shit, okay? So now I see the hourly is still moving down. It's coming down, but it's off of an uptrend, okay? So, sorry, this is still a green zone here. Now, when we go into the 5-minute candles, okay, this is what we talk about scalping. 5-minute time frame, right over here. There's big 5-minute candles. There's structural 5-minute candles like this, okay? So you see, real quickly, I just want to show you. See the top right there? See where it came up? These are 5-minute bars now. See where it came up? Back down, back down, back up. Same red zone, 4485, back down. It came back up. Look at guys, when I'm talking about manipulation, like come on. Are you telling me this candle with all that bullish volume could not open and just break this red? So they brought it back down, okay? But notice how it's moving up. The depth of market is moving up. It's ascending. A lot of bullish ignited candles, higher low, higher low, higher low, building. This is a breakout impulse candle. Sometimes when you have intuition, when you see how it's breaking and you see how short wicks these are, this is the time and place when to take an impulse trade. Okay, listen to me because I do take impulse trades and I don't just trade them if they have a massive wick. Okay, look here, it struggled there. It came back down, but it picked up. It came back up. Right there, it should have potentially broke out. Okay, but they held it down. Why? Because there's pending orders waiting down here. So the market is greedy. The market is greedy. You shouldn't be greedy. The market is greedy. It will pick up every single order it can. Okay, and it will hold it until it can pick those orders up. Okay, it can put as many offers as it needs because they're the market makers. They can make the market go up, down, sideways, do whatever the fuck they want, okay? You and I are trading their market. We're playing their game. If we go to play basketball and I come to your court, I come to your backyard, that's your house. That's your court. Right now, we're coming to play in the market makers playground, okay? So regardless, we have to follow their rules. If I know that this is how they trade, I gotta follow those rules. If I took an impulse there, I'm stopped out. If I took an impulse there, I could potentially be stopped out there. But I see how it's building, 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 and then this is a breakout candle, okay? And then see how it just goes and you don't know where it could go? I guarantee you, if we just look to the left and we see above this red line, we could maybe see some structure. Look, follow this. Watch what I do, guys. Okay? Look at that red line. Same red line right there. Notice how it was a head and shoulder pattern right here. Look, guys. Look. It came up, left shoulder, back down. There's the head that broke out, came back down. It retested the right shoulder, the red line. That's the same red line, 4485. So all I do, this is me as a scalper. Remember, if these were 4-hour daily candles, you should be doing the same exact shit. 500 viewers on YouTube and 100 of you guys listen. So the next point of interest are those bodies right there. 4485, 4493. Okay? 85 to 93 is $8. That's an 80 pip zone from right there, red line to red line. This is how, if you want to learn scalping, I'm telling you how to be a disciplined scalper. The hardest thing to be a scalper is be disciplined. Okay? Believe me, I scalp for a living. I scalp 1-minute candles. You have to, if you're not a disciplined person, don't learn scalping. I'm telling you the honest truth. I'll save you years and I'll save you a shit ton of money. If you are not disciplined, forget about scalping. Stick on your higher time frames. Look for more intraday trading and look for swing trades. Scalper, that's it. That's all a scalper. That's me. I'm telling you, I am a scalper. So if you have a friend who's another scalper and they're telling you something different, that's fine. I don't give a shit. I'm telling you what I've learned in 25 years. If it fills that zone, that volume did its job. Do I want it to continue to fill those wicks? Absolutely. Okay. But I take my 80%, it did there, and I leave a runner. Okay. Yes, could that candle break out and go there? Absolutely. I've been in trades where I take that and it just continues to break out. But I have rules. I stick to those rules. Okay. And then the next one. Okay. So then what is the next job of the candle? If it breaks out of there, it's to fill that next wick right there. Look at the number. 4501, 4,500. This is back a couple days before, on Monday. I'm analyzing Monday and today's Wednesday. Do you understand what I'm doing? Okay. You got to look backwards. Okay. That's why candlesticks is a universal language. Okay. I'm speaking English right now. Hopefully you guys can understand. It's a universal language. Okay. I'm also Albanian. I can speak Albanian. That's a language I can speak. If you knew Albanian, I can speak to you. I also speak broken French, okay? So when I say fuck you or something like the F word, I'm speaking French, okay? I'm French Canadian. So that's my French Canadian coming out. That's a universal language, okay? But price action is a universal language. We can all learn this, okay? We're doing mathematics. We're looking at lines. We're looking at these things. We can learn this. This is a universal language. Price action candlesticks is a language that all of us can learn. It's telling us exactly how it traded in the history in the past, where it's trading right now in present time, and we can predict with everything we learned from the past where it can move into the future. Do you understand? If I look at this in the past, I know if the volume fills, I can predict where it's going in the future. Guys, understand, please take some time to understand what I'm saying. And then here's where you have a little zone. See there, a body, and a wick right there. So if I was to draw a zone now, right there, see a little tiny red box. Sometimes that's all it takes is that. Now look, you can right click on this, extend it to the right. Okay, so you don't have to drag it. It will automatically. So it's gone into the future. There it goes. Okay, so let's go back now and let's review this in real time. Right here, okay? So here was that breakout, okay? If you want to trade impulse, look, okay? There it was. It's got no wicks to fill. It built its way, and there it is. Fill from the red line to the red line, okay? See right there what we just did? But you see, okay, when it got there, it broke out continuously, Okay, so it didn't just come right there. You know, when I'm in a body of a candle, sometimes this could have been a whole big blue candle that just broke out. Okay, so maybe I didn't do my 80-20% rule because it just broke out. Okay, but if it's coming up there and it's catching a wick there, then I know something fishy is going on. But this thing just broke out of there, and look at where it came, right to that almost red zone, came back. Again, that red line, what I do is I just manipulate it, I cut it in half. Right? That's a big bullish candle, structural candle. I could find the point of control. Then the next pull, short wick, pullback, open black, 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 did not come down in here. I could potentially still be holding that trade. What I would be doing is taking my stop loss to break even. Maybe now when it reaches the red zone, this is me personally, this is where I take out 80%. Because I know when it comes to the red zone, it can come back down black. But 20% runner, continue to close. There's a Tetris piece. Learn your pieces. Tetris piece, that's your inside consolidated bar following the momentum. So sorry guys, that's a consolidated bar right there, right there. And you see, it's like when you play that game of Tetris. It came up, inside bar, and just continued to break out of there. It's following all of this momentum, continuing to break out. Now, this red zone would turn green zone if I was scalping, right? But that's a good way how you can judge which candle to cut in half, what levels to look for, and how you can get 100, 200 pips in a matter of minutes. But it took a long time for that trade to develop because look, it was in here for maybe 1 hour, 2 hours accumulating for that big breakout. So sometimes markets need to accumulate volume in order to break out bullish or they break out bearish. This could have been a bearish move. Like it could have, see when it came up there, the sellers sold it down. When it came up there, it was coming down. If these sellers had more, it could have closed below there. And then this could have been the big black move coming down, right? But in this situation, the buyers won, okay? So let's just now continue. Just clean up this lines. We'll see what's going on now in real time. Where are we at? Okay, so this is what's going on. I don't like trading this shit. I'll be honest with you guys. Look, it just came up. It came back down. Big black candle came down right there at 11:15. It came back up, holding in here, coming back. So I don't like trading this shit. I'll be honest. What I'm going to do is wait for something at this yellow line, okay, or something happening at this white line, okay? And what could happen is sellers could continue to push it down, but I don't see, look, I see an impulse wick, I see a wick, impulse wick, body, body, and from right there, okay? So if we see black volume closing below here, we could use this as resistance. Then we have a big gold sell, okay? Where could it come down to? Right back down to what I was just showing you. That candle that has not been transacted, there's 50% of it right there. 4490. If, like, look, see that bar that I was just telling you about? That one right there? Right there, okay? And then if it comes into, if it breaks that, you better respect that yellow line because that's a daily line, okay? So that's where we could go if sellers continue to move it down today. If the buyers are still picking it up there, picking it up there, picking it up there, picking it up there, still in this big green zone on the higher time frame. So the buyers are still here, but they cannot move it above here. We got lower highs right here, okay? You can see how the sellers are still coming down. Here, lower high, daily getting rejected. So we are pushing down. So what the buyers need to do is close it above here, maybe retest this, then they can break it out. Can it get all the way to the daily high? Potentially, but look at what it has to get through. There's a little double top right there on the 5 minutes at that 4585. Okay, so it's got to get through there. In all of this, if you don't feel comfortable trading from here to here, or even bring it down there if you want to that white line, you can see where the volume is now consolidating. And then the third and final option is we can just continue trading in this range. It comes down, goes up, double top, come back down, could go up, could go down, could go up, could go down. That's the accumulation phase. So you and I, we can wait until they redistribute this volume at some point today. It's not going to trade in here all day today. Okay, it might make an attempt to go through here, or it might make an attempt to go down. Okay, So if you want to trade in here, you're trading in all of this shit. Look, just keep going backwards. And then you can see the breakouts today. Okay, so when it broke down, it was just a quick breakdown. If you didn't pip and dip, just this is where I teach myself. If I was in a sell and I didn't pip and dip, it came right back in. Okay, if again came through there, that was a quick move, came back up. Even when it breaks out, if you got in a buy there, you don't do anything up there, it came right back down. Again, so you got to now know how the market is trading. I know some of us want bigger moves. We want it to go crazy, but this is how it's trading. You can't change that. You can't change it. This is how the market is moving, okay? The only thing that we can do is, if you want to trade inside this zone, measure it. Take your measuring tape from the top to the bottom of this consolidated zone. It's a 200 pip zone. So you got to know, if you're buying and it goes up 100 pips to 200, you better be doing something. And same with sellers. If you're selling it back down and it goes 100 pips to 200 pips, you better be doing something. This is where, otherwise you're watching your money profit, go back to up here, draw down, go back to profit, draw down, profit, draw down, profit. And you're just, as a scalper, it can pick up money here, pick up money there, pick up money there, pick up. While you're waiting and you're holding your position, a scalper is cleaning up this entire zone, right? Do you guys understand what I mean? A scalper could hit his daily goal through here while you're still waiting hours for your bigger move. That's why I personally like scalping, because especially with today's volume, back in the day, if you were scalping a tight zone like this on gold, you were lucky if you got 20 to 30 pips in a zone like this, okay? This is now turning into a 200 pip zone. So when I'm telling you guys, I'm looking for 50 pips on a candle, like, you know, and without getting greedy, if you just buy that, you're up 50 pips. If you just buy here, you're up 50 pips. If you just sell up here, you're up 50 pips. And then just take your stop loss and go to break even. If it continues to push, good, you make more money. But if it comes up and tags you at break even, who gives a shit? Look for another scalp, right? Break evens are like wins, but you don't want it to come down and then start putting you in drawdown, drawdown, drawdown. And so if you're trading in a zone, you have to be very disciplined as a scalper, because one bad trade with improper risk management, let's say you had 3 good trades, you're up 150 pips, and then you don't follow your rules and then it breaks out and then now you're down 200, 300 pips. It just erases all of your previous scalps, right? So you got to be very disciplined. That's what I said from day one as a scalper. If you're not disciplined, scalping won't be for you, okay? So it's still building in here. Guys, one other thing I wanted to show you today, okay? Normally when we do gold, we do another index. We do NASDAQ or we do US 30. Someone said to me, Ron, gold is very, very difficult to trade. And I completely understand. So if gold is too volatile and it's difficult for you, I could imagine if you're a beginner trader and you want to trade gold, for an experienced trader, it's very difficult. Look at this. Visit Forex, okay? GBP USD. How many of you guys continue to trade Forex currency? GBP USD, okay? So look at like this big black candle, that's a structural candle, right? So when it closed below this support, okay? So first thing I do with that is open, close, right? Same thing I do. I can figure out where the exact 50% is. I can figure out where the point of control is, and I can stretch it into the future, okay? You see how Forex is not as erratic and crazy? It trades very technical. Like, look, if you were to acknowledge this was a resistance and you stretch that into the future, look at, there's your fake out, guys. Everything I teach, everything, guys, I'm putting my name and reputation on the line here, okay? I'm telling you, I know what I teach, and I know, guys, this is the second top. It came up right there. See how it closed, okay? Now, I always say, guys, look at the next candle. This candle should have opened bullish and filled that wick and continue to go. As soon as you see a bearish ignited candle, you should be asking. Light bulbs should be going off in your head and saying, what is going on? And then you see the fake out, see how it came black, bearish, did not fill that. Bearish, bearish, bearish. Did it stop at 50% of this candle to catch a wick? No. Bearish, selling, selling, selling. Did it engulf that bar and close back below that red zone? Yes. So that is a double top fake out. Okay, put the pieces of the puzzle together. There's your double top and that's your fake out. Okay, unfortunately for those FOMO buyers, they got screwed there. but they didn't follow what's going on. That's not my fault, okay? I know how to trade, you know how to trade. For these traders that bought up here, that's not my business, okay? They should learn from SST what's going on here. Now you know that that's a bearish ignited candle. What I do is I cut that in half. Same shit I do on every single security, any bar. I don't care what I'm trading, okay? Look at it. Is that a short wick? Yes. Did it retest and break? Yes. So that is a point where you should be thinking sell, right? You know, look backwards. You have a double top. You have the fake out. What more evidence do you want to hit the sell button? What do you want? You want to hear me or Dave tell you to sell? No, you can do this on your own, okay? And then stop loss, if you want a really tight stop loss, you're just above 50% of that candle. You're in the point of control. But what happens if the next candle, you know, you get in it and it just comes down there and comes back up, stops you out, then it drops, okay? It's unfortunate when that happens, it sucks. But that's if you're trading with a tight stop loss, you got to know the implications. However, some traders, scalpers, I'm saying scalpers, are just above the previous bar, okay? If you want to give it more, you're above that high, okay? Now, your reward, what are you looking for? You're looking to fill this wick right there, okay? And when it gets down there, that's where, you know, you're filling that wick and you're looking to continue to break. That's when you can start to take your stop loss and start reducing your risk. You don't have to go to break even right away. Now you can reduce it from the top of that wick. You're in the money. Maybe you just want to be above that point of control again. You still have potential to lose, but you're not going to lose as much, right? Ultimately, if you want to get it to a break even, that's perfect. Then we can control our emotions. We cannot lose any money. We're in the money. All we're doing now is just managing our profit, okay? So let's measure this candle, because if this was gold, this big black candle, this would be a 300 pip candle, the way how the market is moving right now. This is not gold. This is GBP USD. So you got to have the right mindset with what you're trading, okay? If you think you're going to get a 300 pip 5-minute candle on GBP USD like this, then I'm going to tell you, what are you smoking, okay? Look at it. Just measure. Use your measuring tool, okay? The entire distance of this candle is 22 pips. 22, okay? So you guys understand that if this was gold, that could be a 220 pip candle, a 300 pip candle. This is not gold. So you got to know what you're trading, okay? This is how gold used to trade before back in the day. That's what I'm saying, guys. I used to get happy when I was scalping for 20 or 30 pips on a 5-minute candle on gold. Now the volatility in the volume is insane. It's on steroids. It's gone up to 100, 200, 300 pips, okay? So that's what you're looking for on GBP USD. Do you want to do a top down? Do you guys want me to show you a top down on GBP USD? While gold is still in this box, I can do a quick top down, okay? Guys, I'm telling you, if you're learning, learn the technicals. Then when you get more experience, then you can trade gold. Then you can trade Dow Jones. Then you can trade NASDAQ, okay? But this is where I learned everything about trading, was GBP USD. This is my baby. This is my baby. Miss Jones is that's my girl. But GBP USD, this is my baby right here. I used to trade this when I was learning how to trade, and it taught me everything about technicals. Then when I learned that, and then I started to learn risk management, and I got my capital size back, then I started to trade gold, Dow Jones, and I saw how erratic, how volatile it was. But my losses were more controlled trading GBP USD. My wins were not, my reward was not as big, but I was learning, okay? So let me walk you through a top-down analysis. And this is, if you're a beginner, this is perfect. This is what I would recommend you learn on, okay? Any currency pair, GBP USD, Euro USD, GJ is a little bit more erratic. Okay, it's a little bit more erratic. Some currency traders like the volatility of GJ, so they're more attracted to that. But this one is very stable, okay? This one is a go-to, okay? So quickly, I'm not going to do as much detail as I did gold, but start on the daily and let's review this. It's been a while since I did a top-down analysis on GU, okay? So is there a specific high up here? I'm on the daily again. Let me mark the high, okay? A high on the daily is yellow. Is this, remember when we're doing gold, it's an orange Donald Trump makeup face, because I know that that's an all-time high. Is this an all-time high of GU? How would I know that? Okay, look backwards. It's a high. Is it an all-time high? See, I don't have much analysis on daily. I got to go higher time frame, weekly. Okay, so there it is. Oh, okay. I see it's not a high. It's a lower high. Okay, because back over here in 2021, it was trading up to there. So there's another key line up there. See, when it came 2 times, it came up. That's a double top. You know, it came up one time, one top, came back down, came back up, second top. There's the drop. There's the sell-off. That's a double top. Okay. When you're looking for zones, you see the yellow line to the bodies right there. I can extend that to the right. Okay. So same thing when I'm looking for zones, same shit. Okay. Just let's extend it to the right. Oops. Did it not extend it to the right? Oh, I have it on don't extend. Okay, so you see, I've extended it to the right. Look at the number. 142 exactly. So you can see psychological numbers also work with Forex pairs. 142 exactly. The high is 142.50. 142.000 up to 142.50. That's a psychological block in the market. If you go back now, okay, see, now I know if GU on the daily ever came back and closed up there, it's moving like a magnet right up to that zone. Okay, how many pips can I make? Add it up. Use your ruler from 138 to 142. It's approximately 400 pips. That's a daily trade. If that was gold, that could have been 4,000 pips, but we're not trading gold. Was there higher than that? Yes. So that's not an all-time high. Look at the liquidity grabs. This is how I learned what is liquidity. Okay, guys, please just learn today. Okay, maybe if we don't even take a live trade, today is a great learning session. Look at this. Look how technical and beautiful this is. See where it came up, impulse, close below. Another impulse, lower high, volume pushed down, came back up again, another impulse. And then that's when they sucked in all the buyers. There's your closing bar, closing below everything. And there's your extended drop. This is what you should be looking for in the markets. Now, if you bought on excitement, you bought on impulse. If you bought this day on impulse, you got excited, you got pushed down. Again, if you bought here on impulse, you did not wait for your bar to close. Had you waited for the bar to close, it looks much cleaner. Okay. Same with when I'm trading 1 minute, 5 minute candles. If I buy a 5 minute impulse, I could be in drawdown, possibly hit my stop loss. If I buy again on a 1 minute or 5 minute impulse, I could hit my stop loss. If I wait for those, if these were 1 and 5 minute bars to close, I see it fake out, fake out, fake out, fake out. They spike the liquidity, closing bars, pushing down, low wicks, pops, drops, shit like that. Okay, you can really learn this stuff. Okay, if I was to continue, look back, remember, you look in the past to set up your grid map. If I was trading GBP USD right now, I would be setting up my charts right now and I would not be erasing these. Look, we're nowhere near the all-time high. Look at, I can go look at how much of a downtrend we're in. Okay, so up here, 2007, was there not a financial crisis back in 2007? Does anyone remember when GBP USD was $2.10 up here? Okay, so since then, we've been pushing down, guys. Okay, that's a big look. Okay, a high to a low. Grab your Fibonacci tool. A high to a, oh shit, it hit that. High to a low. Anytime. Now when you're doing analysis, you should be able to do this. Okay, there's a high to a low. There's your 382, your 0.5, your 618. Those are your zones, right? I would, if I was doing this, I would get my other ratios. I would be adding them. But you see where it came down, back up, did not create any more highs, continue pushing down. So you can see we're clearly in a downtrend. From here, it pushed down, found the bottom, came up, right here. As soon as you see that there's a pivot, mark it up on your charts like that, okay? And then you see, again, when it came back up, it just was a failed breakout and back down. It's kind of like an impulse. And then sellers broke it down. It came back into that zone, double top, continued to drop down. Okay. It created a new low right there. When it did, it came back up. Again, double top that red box, continued drop, new low. Now look, The yellow line now is the new double top. It's not coming up, and we could be continuing to push down. If it pushes down, right there, there's a big pivot right there at 121. Have a yellow line right there, okay? If it ever reaches there. There's another pivot, okay? Sorry, guys, but that's just to show you that this is not an all-time high, okay? This is just a regular resistance on a daily. Okay, so if we continue push down, most obvious levels is this push down. Here's a pivoting point, 130, 131. Let's mark it, okay? Don't get lazy in your analysis, just mark it, okay? You can go all the way down to the wick if you like. I like to hang around where the body of volumes are, okay? And now some other pivots where we came up right there, it stopped and went right back down. Mark that location. Okay, look at the number, 133.78, close to 134. Continue push down. Now we got levels where we're just moving up and down off of. Now, okay, if I go most recently, okay, I can see what day we tagged in here. This was Monday. We came up, rejected, okay, and continue push down, lower high, volume closing below. That's a structural bar. Why? Because it closed below this bar and that wick. So that's a candle I like to just cut in half and figure out a point of control, right? Had I done that, and then I wait, it came up blue, right into that point of control and continue push down. See Monday, and then there was a gap down on sorry, what's going on here? February 23 and March 2. Why is there a discrepancy here with these dates? Oh, I'm on the weekly. I'm sorry. I'm on the weekly. Going back to the daily. My bad. I went to the weekly to see the all-time highs. Sorry, guys. I was on the weekly. But there's nothing wrong with having weekly points of interest. If you're a daily trader, you need the daily volume to close above weekly resistance so you can make weekly support to continue go back up. So this is weekly resistance. I can see we closed above it, but we're barcoding now on the daily where it's moving blue, black, black again. So this is not the best volume to be trading. What we got to look for is an overall kind of pattern, okay? So we are pushing up, double bottom right there. It came through all the way up there. Did it create a new high? Yes, it did. It created that new high. And slowly we've been coming back down, but we're finding now good daily support. Where? At the W neckline. You can see it now, okay? So you see this right here? There was the neckline. Came up, pivoted back down, closed above, turned it into support. Next big move, that's a structural bar. Cut it in half. Find the point of control. You could have waited 4 days for the pullback and continue to go in. Okay, now we're revisiting this location. So what I like to do is find zones. I like to find zones. Okay, so one zone that I find is the yellow to maybe a blue candle right there, that gapped up candle, and I make it green. Okay, because if it ever comes down into here, it could be daily support, okay? Could be another second bottom. If this is one bottom, it's coming up, here's the neckline. If it ever comes back down there, could be the double bottom. That could take us through here. If it closes back below there, then we're continuing to sell down, okay? So, but now this is not good daily volume. See, it's just moving down, back up, down, back up, down, back up. Down, could go back up or come back down. So the entire daily candles are barcoding in this range and not moving anywhere. I can see sellers are selling, buyers are buying. Sellers are selling, buyers are buying. Sellers are selling, buyers are buying. Sellers are selling, may continue come down lower. But what we need to look for is if you're looking on higher time frame, right? Okay, here's your resistance. Right here, there was support at that wick, support at the wick, support at that wick, support at the wick, volume closing below now. Now this yellow line turns to, look, resistance, impulse, resistant, volume still below, back down. Impulse, 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 nothing coming above there, okay? So this one, maybe just move it down to here, okay? See how I just moved this one down to here to correspond with this gap down body that's still building, and then it's still got a wick, a wick, a wick, a wick. So to give me distance between my zones, you see this yellow line is equal to that yellow line, equal to that yellow line, basically equal to that yellow line, and equal to that yellow line. So this is where I'm giving my zones. Nigel, I know you trade GBP USD, so maybe this this analysis is to help you, brother, because I know you trade GU a lot, okay? So, and then above here, I know where, Nigel, my red zone is, right there. See that little imbalance? I make it like a red little hat up there to capture that wick, that wick, that wick, continue that wick, that wick. So now I got, see my consolidated ranges. So if I'm waiting for a bigger move on GU, guys, if I'm a swing trader, okay, what I'm looking for is, I can see how the volume is, this is an entire flag, right? Sometimes on the 5 minutes, we trap these zones. On the daily, you have to wait longer. Me as a 5-minute trader, I might wait 30 minutes, 1 hour, and it's breaking out. On a daily candles, you might have to wait 1 week, 2 weeks, 3 weeks. But there's still sellers selling, buyers buying, sellers selling, buying. So we know we're smart. It could continue just to trade in here for a couple more days or weeks, right? Up and down. However, GU is not going to stay in this forever. If it builds enough support off the bottom, we got higher low, builds more higher lows. Maybe we're ascending to break out of here. We might have an impulse breakout, but we don't get excited on impulses. We wait for volume to close. If it closes, we make this red green, and then we could break out. And where could we go? Your next resistance, right there. See how the yellow lines are basically like a grid? They're equally separated. And if I'm measuring those, like from yellow to yellow, I know how much pips it is. That would be about 137. Okay, it's a currency pair, 137 pips. If this was gold, this could be 1,000 pips. Okay, but you got to know what security you're trading. Okay, and then the other third move is sellers continue pushing it down, close below there, and then come down there and break, and then go backwards. This is what I always do. Go backwards. There's how you learn. It was a bull flag, continued to go up. Go backwards. That's where it was a red box. Why? Because it closed below there, came in, red box. Continue going backwards. There's where it picked up the bottom right there, back in July of 2025. Continue going backwards. See, there was a fake out. That's where it faked out, came back in and back up. This is how you learn, right? You got to do the analysis now and go backwards. Same with this red zone. You can continue to learn. And then see, we're in a big head and shoulder on a weekly. How do I know that? Because I know that a bunch of daily candles is more than a week. There's a left shoulder. There's where the head broke out. It came back down. There's the head. We are in the right shoulder right now. So we know that head and shoulder patterns have a high probability of following this direction, of moving down, closing, maybe retesting this, then we break and drop. And if this is the last bit of support for GU, right here. If you want to move this yellow line down to there, that's fine. And then that's the last bit that can hold it, because if it breaks, we're dropping back down to here or potentially here. That's it. Guys, you got, and Nigel, when I do this, I can keep this chart for weeks, days, and months, okay? I'm just going to trade the particular volume, whatever I trade. If I'm a 4-hour trader, okay? Guys, I'm just going to get rid of these arrows now. Does this analysis work with gold? I'm going to tell you guys, listen carefully. This analysis works with any security, anything. See my watch list over here? I can do it on DXY, gold, NASDAQ, US 30, US oil, AUD, USD, Ethereum, Bitcoin, USD, JPY, AUD, JPY, German 40 DAX. I can do it on Euro USD, NZD USD. I can do this on Apple. I can do this on Amazon. I can do this on Beyond Meat. I can do this on Enbridge Gas. I can do this on Intel. I can do this on MicroStrategy. I can do this on Meta. I can do this on Palladium. I can do this on Pepe. I can do this on poultry. I can do this on eggs. I can do this on coffee beans. I can do this on you name it. You name it. Whatever you want, okay? We're just doing analysis. We're doing price action analysis, okay? So that could clear that entire question for anybody. That's why I take so much time to teach you this, because I know if you learn this, you can do this on any security you want, right? I just trade gold and US 30 every single day because I feel comfortable trading it and it pays my bills. That's it. But if I want to trade GBP USD, I can do it as well, okay? I'm showing you. Guys, I'm just setting up the zones right now. So this is daily. Now, if you're a 4-hour trader, okay, let's break it down. Let's go down, okay? If you want to do, again, how I do the daily candle, if you are looking to scalp, okay? So let's follow yesterday's bar. We know it's bullish. Bullish, bullish, bullish. Did it do its job? Did it fill the previous wick? No, it failed. It came down with a lower high. It came back down to the opening price. Sellers were in control yesterday, pushed it down, black, black, black. Did they close it below this candle and make a new low? No. So it found a higher low and came back and closed as a spin top pin bar candle, okay? These are not the greatest candles to trade. We're still in this range. Blue, black, blue. This was black, came back up blue. And then today, now, when we're looking for to go into the intraday, again, closing and opening is a point of interest on all securities, on all bars. Let's place a yellow line right there, okay? It was originally, where did it open? I look at the numbers, always. 1.3410, okay? Just off of the 1.34 exactly, psychological number. It was originally bullish today. It was blue, 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 and that's the highest point right there, okay? So you see, that's my highest point. That's my purple line to represent. And then I look at my purple line, the high today. Is it higher than this yesterday? No. Is it higher than this? No. Is it higher than this? No. Are we below a red box? Yes. So sellers are still here. If I'm buying, I got to know that I'm buying into sellers, okay? And they're there, lower high. They're pushing it back down to the opening price. They flip the volume where GU now is bearish, bearish, bearish. It came all the way down. That's my lowest point. There's my purple line today, okay? And then I ask myself, is it lower than yesterday? No. Is it lower than this? No. So buyers are technically there with a higher low, picking it up and pushing it back up. But we're just trading sideways. Unfortunately, GU is sideways. It's in a range. You got to learn when your security is in a range, this is where patience, you got to be able to wait it out. You got to know what's going on when the market is doing this. The market is accumulating. There's 3 phases of markets where they accumulate, redistribute, they accumulate again, they redistribute, and then there's a phase of manipulate, where they got to manipulate highs and lows and get pending orders, okay? We're not in that yet. We're in an accumulation range where it's just coming down, back up, down, back up, down, back up, and possibly going down. But I can see it is going from here, higher low, higher low, higher low, higher low, higher low. So I know it's ascending, but I can also see from the top, lower high, lower high, lower high. It's still pushing down. We're in a pennant, like it's a flag. And then I showed you the bigger overall picture was that head and shoulder, right? Left shoulder, head, we're still trading in the right shoulder. But patterns can be invalid as well. If buyers do close it above here, it could turn like this and then come up, and then that could be the double top and then start pushing back down, okay? So Nigel, also have a red box right here. At this previous high, you bring it down to those bodies and then have your red zone. Stretch it there. So you see, if it comes back up there, Nigel, then I know that could be the double top, right? Because this is the one leg up. So far, we got this leg coming down. But if it does like this, what I'm saying, it comes in there and doesn't break out, that's the double. And then coming back, retesting this or breaking this, and then you got the massive selling coming down, okay? So if we take it, again, one line, one zone to the next zone, okay? So we are still in this consolidated daily zone over here. Now I got some boxes. I got some daily information. So you can either go now to the 4 hour. I'm just going to stick with what I do. I go to the hourly, okay? So now we're looking at hourly candles. Can we identify structural hourly candles on GBP USD? I hope we can. This is an unusually large size blue candle that closed above all of this, okay? So that's a first candle that's a light bulb's going off in my head saying, let me find half of this and let me find the point of control. Do you guys understand that that's a structural candle? That's what we're looking for. That's a massive bullish engulfing candle that closed above this entire range of volume. It's an engulfing bar, right? It closed all above that, okay? So first thing when I see that is I go through my routine. Grab my Fibonacci, opening price, closing price. Okay, guys, now this is where we're talking about that big word, fancy word, confluence. What is confluence, okay? This is where now my analysis, what I'm doing off of this bar, look at how the 50% is lining up, Nigel, with exactly my yellow line, okay? So that's telling me something. that's telling me my analysis is on point with the higher time frame. So guys, I'm telling you, see how I can do this with gold. I can do this with US 30. I'm telling you guys, I can do this with GBP USD. We can trade soft cattle if you guys want. If anyone knows what's going on with cow prices these days, show me a chart. Let's start analyzing. Okay. So next thing I do, Nigel, is I already have my 50%. I don't need to draw a line there. It's there. I got to do my zone. It's a green zone. Nigel, let's stretch this into the future, brother. Okay. Keep going into the future. Have we came back into this? The answer is no, we haven't. Okay. So GU just took off. When was it? It was at Monday at 7 a.m. Donald Trump, remember? He saved the markets, okay, at that time. So that's where we had the big move. Nigel, we have not came into Donald Trump's retracement on GU. So that's not to say that we're not, but you can see it's slowly coming down. Lower highs, lower highs, lower highs, lower highs. If it comes down in here, that could be a great opportunity, guys, to look for buys and then take it back up, right? But what happens if the news fades this, comes right through there and closes below? Then Nigel, same thing. All we're going to do is just change that zone to red and then potentially come down. My target, like as a scalper, remember I'm analyzing now hourly. That's an hourly point of interest, white line, right? I measure the move, okay? I know I'm not trading gold, I'm trading GBP USD, but what happens if it gets rejected there and I go in a sell? Guys, see, that's 50 pips, 50. To fill a black candle to come down and retrace back down there is 50 pips. If this was gold, it might be 500 pips, but we're not trading gold. This is 50 pips, okay? You got to know the security you're trading. And now I can see that if it comes and breaks below, oh, I didn't want to change that, sorry. Okay, I just wanted to move that yellow arrow. But if it breaks down, what is the most recent low? Look, 50% of this green zone is that drop right there, okay? Guys, I don't make this shit up. Right there. Okay, you guys know I did my analysis on the higher time frame to get my green zone. Now, what I do to measure it is just the bottom of the green zone to the top of the green zone. There's my confluence. 50%. Look at that drop right exactly at 50%. That's how I learned how to do this. That's why I'm comfortable doing any security. Some of you guys say, Ron, let's do this, let's do that. I have no problem doing that. Any time frame, any security. I feel confident with what I do because it's the same routine that I do every day. So I know that this is a working strategy. I know if you learn this, you can be successful doing this. How do I know that? Because I'm a successful trader. I'm not trying to say that because I show off or build an ego or get you to subscribe to the channel. I'm telling you, I can teach people to be successful. I've been doing it all my life, okay? It's just you got to take time to learn how to do this. I know a lot of you guys, we haven't even looked at to take a scalp today. We haven't even looked to take a trade today. That doesn't concern me because I know tomorrow I can come back in Tokyo and we can have another bonus session and we can look to trade. But I promise you, if you learn this, you're going to really improve your trading, okay? So now we're marking, see how I'm analyzing hourly. Okay, hourly now. So look at the hourly candles. Bearish, bullish, bearish, bullish. Look how clean. Okay, guys, this is why GU is my baby. Like I'm telling you, you can learn so much. Remember where I told you guys, it takes 2 bars to understand a consolidated zone. How did I learn this? I learned this with GU. And then this is why I learned how to do this with gold and Dow. Look at right there. You see that black candle, how it came back up blue and closed there. Opening, closing prices. I tell you, I don't give a shit about the wicks. I don't make my zone where the wicks are, right? Like that. I make them where the bodies open and close. And I tell you guys, some of you guys listen when I say this, it takes 2 bars to identify a zone. Now, when you stretch it into the future, now I got 3 bars. That's 3 hours of trading. This is not just, these are not 1-minute candles. That's 3 hours of volume building. And now look, 5 hours we've been in this flag. 5 hours, okay? So I stretch that into the future, okay? And go backwards. You can still see right there how it was a zone, came back up. Go backwards. It was a zone that went back up, okay? Go backwards. Oops, shit. I didn't mean to do that. Go backwards and you still see it's still a zone. Is there any black volume closing below here? No. I see impulse, 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 impulse. All of those traders that took sells on impulse, they're in drawdown right now, okay? I guarantee you their stop losses are up here. So if I was a market maker, I could come up, take the stop losses, come back down, close, finish off those wicks, close below, retrace, get some dip buyers, come back in and sell the whole position on them. I'm not a market operator. I'm not a market engineer, but I know how they operate because I've learned what they do my entire life. So you got to understand the market operators, market engineers, their job is to grab liquidity. Okay. You can see how many. So when one black candle closes below here, that's called confirmation. Then I know a black candle is closing. If it comes back up, that could be a selling area to sell, to take out this and drop down. Look, as soon as it takes out this wick, the only other thing that can save GU from breaking down is right there, that wick. And then we're coming into the Donald Trump 7 a.m. pump. And then maybe pick up all of these pending buyers still waiting for all of these hours, okay? So I think that it could potentially push down. However, there's still buyers rejecting it and coming back up, but we're stuck in this flag. So now I go to the lower time frames, the 5 minutes, okay? We can even scalp GU, okay? We're not gonna get crazy moves, but you gotta understand, if it moves 10 pips, I'm gonna be jumping up and doing cartwheels over here. That's why when I'm trading gold and it's going 100 pips, 200 pips, you know, it's taking me my brain time to change my mindset because I used to trade gold for 30 pips. Now it's 100 pip moves. So these are the 5 minute candles, okay? There's a structural 5 minute candle. See, look how clean GU trades. If you were to consolidate that zone, see how easy it is to trap that, okay? And then fake out, okay? We talked about this. Was this the candle we talked about? Fake out, yeah, it was. Came down, closed below. There's 50%. See, even if I was to use my Fibonacci tool to cut that candle in half, look at it. It lines up with like my daily point of interest, that zone. So that's a red zone right there. Based off of that big bearish candle. Are we trading back in there? No, okay? I see, what do I see? I see a like lower high here, okay? So scalping. I see right here where it was support. See how I see that? Guys, I need you guys' eyes to work like me, okay? See right there, you can see the support. Body, 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 right? Go backwards. There, it's a double bottom. One bottom, pivot, came back up, double top. There's the break. There's the retest, retest, drop, okay? Now it came back down to the daily low. There's a double bottom, traditionally more volume, come back up. And you see how the same static location, the line. If volume is above, it's support, support. If volume closes below, it acts as resistance, 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 right? If it comes back up again, that's still resistance. It could come back down. If it closes above, that red line could turn into static support for a pullback. If it pulls back, I'd like to buy that, and I'm taking it back up to the zone, right? If it breaks the zone above there, then it could trade to the top of this fake out right there, okay? And I know, now measure your moves. If you can't do the math in your head, okay, from 134.10 to 134.25, 10 and 25 is 15. That's 15 pips from the yellow line to the red line. That's if that fills and you're in a blue and you're in a buy and it comes up there, you are up 15 pips. That's, in my opinion, a fantastic trade. And then there might be greedy traders that say, oh, Ron, it's only 15 pips. I want 50. I'm going to say, I don't give a shit. I want 52. But you have to respect these sellers right there. If you don't, you could come up 15 pips. Those same sellers who faked out the market and dropped it, they could be there with offers, more offers, and then it goes up 15 pips, and then they bring you right back down with a beautiful black candle coming right back down, and then you piss away your 15 pips, and you're not at a break even, and then they come after your stop loss, and now you're down 30 pips, and then that's a 45 pip swing, okay? If it does break out, we have our purple line. That's my daily high. That's a 25 pip move, okay? Not 250, but 25. So you have to understand the security and the the volatility. Look how clean it is, okay? This is not, look, it's just blue, black, blue, black, blue, black. We're inside here. So this is how you can trade a nice, clean security, okay? And you can patiently wait, okay, for moves. What I would do with this is if I really want to consolidate it, right here, red flag, still red, okay? If I really, really want to consolidate the volume, this is a green box. See, it came in, green box. See, it came in, green box, okay? So we're smart. We know that GU is not just going to trade in here. If we're looking for potentially 20 pips, we can maybe get it, okay? And if we're looking for also maybe to sell for 15 pips, we could potentially get it, okay? If I know that this is what I'm looking for, I'm going to set an alert, maybe at this red line, give me an alert if it gets up there, add an alert. I'm not saying I'm going to trade it blind, I'm adding an alert. I'll add an alert at the lowest point of the day and watch for a fake out or watch for closed volume. I'll add an alert there. Okay, so I can patiently wait. I can go do what I got to do. I can go play with my kids. I can go to the gym. I can go have a coffee. I don't need to sit here and watch this volume just go up, down, okay? I know how it's trading. I know now my options. My options are if I want to trade in here, it's going up, it's coming down. It's going up, could potentially come down or build a higher low and come back up. It's trading in that zone right now, okay? I know that there could be a big move at the lowest point of the day. It could break, false breakout, get a wick, come back in, close above, retest this, and go back up. If that's the case, I know how to trade fakeouts. That's what I could watch for. It could come down and close black below there, black, not a fake out, and then come back up. That's a red box. Then it's pushing down for the 15 pips, maybe continuing to break down. And I respect the top of this green box. Why? Because that's that Donald Trump retracement candle right there. And if I'm going up 30 pips, I have to respect that. That's where my stop loss goes to break even, maybe 80-20 rule, because I know I'm trading in that big green box where big buyers could be waiting to return it back up, okay? So you got to know where you're trading. Same rules apply at the red box. It could break out impulsively, I wait, could be a fake out wick, come back in, close in here, retest this, then I'm selling the fake out move up there, selling back down to the green zone, and then if it follows whichever option down there, I could continue trading with that. However, if it trades back above here, buyers are building it, and it closes blue above there, confirmations, I change that red box to green, pending buyers, buy it, and then I could go up 20 pips up to the yellow line because I know it could come right back down. If it goes above and breaks, maybe they use the yellow line for support to continue on the next few bars to get me up to there, okay? That's scalping, right? This is scalping. If you don't want to scalp, then don't be on the 5 minutes. What are you guys doing on the 5 minutes if you're not a scalper? What is your time frame? Maybe some of you guys are 30-minute traders. Stick on 30 minutes, okay? What are the 30-minute bars doing, okay? 30-minute bars had a nice clean double top, came up, back down. There's the neckline, came back up. Okay, guys, if I was a 30-minute trader, is this not the same shit that I look for that you should be looking for? Was this not a 30-minute line you should have here? Okay, do we not see the 30-minute one top? There's the stop, pivot, neckline, support, came back up. Look at the liquidity they grabbed. They produced that high, then it got rejected and closed right there. There was the close below, okay? And then if you waited, there's your black bar closing below the structure. If you waited for the retest, there's the rejection. Look at the wick of that 30-minute candle. I can barely see it so small. Then that should have been a 30-minute sell, right? What other evidence do you need? So if I was a 30-minute trader, I know what I'm looking for to break that wick. I have confirmation that the volume closed and a retest. I go in to sell. Stop loss placement. If I was a 30-minute trader, do I just want to be above the 30-minute wick? I can. Do I want to give it more room to breathe? Maybe above there? Sure. How much am I risking? We'll measure it if you're up there. Because if I did this stop loss on gold, some of you guys would have a heart attack. But if it's on this, it's only 16 pips. 16 pips stop loss. That's fuck all, okay? So 16 pips, and look how much room I'm giving it to breathe, okay? And then my Gold should be minimum 1-to-1. Okay, so 16 pips, if you want to measure it, would be right down there. Okay, so the entire candle is basically 16 pips, 1-to-1. Came down there, 16 pips. However, guys, don't stop. Know what I do. Did the black bar close below those bodies? Yes. Yes, you can clearly see it. Did it make a new low and fill that wick? Yes. The answer is yes. Is there something we should be doing right away with a structural candle? How about we cut it in half? Okay, if you cut it in half, and then you see the next candle open blue, 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 got rejected right below the halfway, then I know it's hitting that point of control, one line above, one line below the buffer, and getting rejected, coming down, it flipped. Now you're continuing to come down, and that's what made the lowest point of the day. That could be, I don't know, a full TP if you're a 30-minute trader, and then you get your 25 to 30 pips. And if you don't do anything down there, see how it could come back up. Maybe you're still in the trade, maybe you're still holding, but the 30 minutes now are in their consolidation. Down, up, and losing volume because it's not the greatest time to be trading this security right now. The best time to be trading this security is in London hours and more New York hours, okay? So guys, hopefully that helps with analysis, with how to do a top down, and basically how to trade, okay? Nigel, do you want me to give you this chart? Do you guys want it in the Zoom? And maybe just continue to watch it, and I'm more than happy to give you guys this, okay? I'll give it to you. If you guys want it, I'll just copy the link. I'll paste it in Zoom for you guys. Okay, guys, and just GU is a nice, clean. You see, it's not as crazy. If we look at gold right now, gold still hasn't done anything, okay? So gold is still in here, guys. Today was a great learning session. That even if I was looking to trade, honestly, I don't even think I would have taken a trade looking at gold right now because I had it consolidated in this zone. I don't even think I would have taken a trade. So we went longer than expected, but hopefully we learned something. Okay, guys, please, it helped me. Let me know. Hit the like button on today's call because I know if there's not a lot of like buttons, then I don't want to spend my time doing this. Then we'll just go right into just quick 5-10 minute top down and start trading. Subscribe to the channel if you learned something, because I promise you guys, if you stick with us, we're not one of those channels that just goes away and we disappear for months. We're here with you every single day. We're here, myself, Dave, the entire Snipers, guys. We have an amazing Discord. I had it on the news because I was just looking for breaking news if anything was going to come out. But we do have a Discord channel, guys. There is traders in this group who are mentors. They are mentors, not just like myself and Dave. We've got Tyler, Serge, Golden Light is in here every single day. Rob is in here. Shay in here. Everyone working together. Dennis. We were showing the dogs, guys. I don't have a dog. I love to get a dog, but I'm allergic to them. I've never had a pet in my entire life, but I want to get a dog. My daughter wants one really bad, so we got to get those hyperallergenic ones. I don't know what they're called, but beautiful dogs, guys. I love them. These are truly a man's best friend, our dogs. I don't have that, so I want to get that feeling of having a dog sitting right beside me here while I'm scalping the markets. But thank you, guys. Forex, Borex, Mano is cleaning up on prop firms. He's got a style, a strategy he's doing. It's excellent. Teaching everyone here. He's a VIP member with us. He's a lifetime member, educating, helping everyone, guys. You guys can be all mentors and help your friends and family once you learn how to do this. I'm telling you guys, it is very valuable to learn this skill. I'm not going to say, guys, I'm a brutally honest person. I'm not going to say it's going to change your life, everybody here. Some traders are just going to give up trading altogether, right? You might be that person, but I want to give you hope that I was going to be that person. Years ago, when I started, I was going to give up trading. And I thank my God every single day, whatever ounce of hope I had in myself, I continued to just learn. And that's what took me to where I'm at right now. So if you're in a slump in trading, I'm telling you, don't give up. Just stop trading your real money. Stop buying prop firms and thinking that you're going to pass them in 2 days and just trade stupid. Just go back to a demo account. Even if you got to do it for 1 day or 2 days or 1 week, just go back to the learning process. Like we're going back to school. Just think about that and just learn how to properly trade. Guys, you can make trading very easy for yourself, or you can make it very difficult for yourself. That's your choice. I had that choice too when I was younger. I decided that I wanted to learn how to trade and make my life easier by trading. And my life has gotten easier by trading. It's stressful. My hair fell out and I got my hair back in, but it was stressful, okay? I'm telling you, trading is stressful. Any mentor or coach or guru that says trading is easy and you're going to become a multimillionaire and you're going to have a fancy car and you're going to go on vacations every week and you're going to be sipping margaritas while you're scalping with your mobile is full of shit, okay? I'm a full-time scalper, and I'm telling you, they are full of shit. You can bring them in front of my face, and I will tell them in front of their fucking face that they are full of shit, okay? I know how difficult it is. Anyone that says this is easy is trying to sell you something. I'm not trying to sell you anything. I'm telling you, to be a dedicated sacrifice trader takes hard fucking work. When we go on our Tokyo sessions, there's guys from around the world. It's 3 a.m. in the morning and they're here learning with us. Guys, that shows dedication. That shows how dedicated people are. That's not easy. A job that's easy shouldn't be getting up at 3 in the morning and stressing yourself out, right? That's not easy, okay? So trading is very difficult, but I want to give some bright or hope for someone that yes, trading can be easy, but you got to have rules when you're trading. You can't over leverage your trading. Think about it. If you take one mistake and you're over leveraged, that drawdown, you're going to panic. And then you're going to do something stupid right after. I know what you're going to do because I did the same shit. You're going to revenge trade after that. And the market can play with your emotions. Like, look at how it's playing with all of these gold buyers right now. All these big buyers thought it's going to break out there. Over leveraged, that big drop. It looks like it's a small drop when we were just looking at GBP USD, but that drop down to there, that's a 170 pip drop. Think about it. That's a big drop. Not a lot of 5-minute traders trade with 200, 300 pip stop loss. They're trading with a 30, 50 pip stop loss, and they are over leveraged. And and then they're getting mad, and then they're buying the market up, and then it comes right back down. Then they're selling it, and they're just playing this ping pong game. Guys, this could be right now a double bottom on a four bars. What I look for: came down, back up, came down, back up. This is an ignited candle, traditionally more volume. So this could be now where the market is opening up. However, we got to see a blue bar break above these wicks and maybe close. So if we get that closure above here, this could be signaling where it potentially wants to continue to go higher, or it could be a fake out where it comes up here, fakes out, then the real drop comes in the market. But you can still see how it's building off of here. If you were buying, for example, this candle alone, that's what I look for. Bottom, back up, bottom, back up. That's a like as a scalper. It's like a Tetris piece, sort of. You got to know your Tetris pieces. It's like pieces of a puzzle when you're scalping. This is a puzzle piece. I don't like the size of that wick. If it was a shorter wick, I would have bought this candle. Maybe this wick, I'm looking at it right now, would have held me off. But if it was a short wick and it opened ignited like this, 100% I would be in a buy on that candle. Guys, I know how I trade, okay? I would have noticed that it made that just right now when I saw it. If that was a short wick, let's say it was right up to there, as soon as it opened ignited, I would be waiting for that pullback, but waiting, maybe 30 seconds, 1 minute, I see it still holding. If it broke the wick, I would be in a buy. My stop loss, really tight, would be under 50% just in case it wants to pull back, or I would just be right below the opening of this candle. Really opening your stop loss as a scalper would be below those wicks. Believe me, that's a big stop loss for a scalper, to be below those wicks. That's why as a scalper, you want to learn how to nail trades with minimal to zero drawdown. That's why you got to know what are ignited candles and things like that. And if I was in this trade, the job of this candle was to fill that wick. That's the job of this candle. It did break out, but look, it's got resistance behind. So I measure, guys. Remember what we were just looking at? We were looking at GBP USD, okay? And that filling the wick is 35 pips. This candle alone is 60. Remember we were looking at GBP USD? Like, look at this 5-minute candle right here, this big blue one. that is a 6 pip candle. Okay, same kind of candle, 6 pips. This is why I prefer scalping gold, because that's 60 pips. It's 10x the volume for the same type of bar. Okay, so this makes pipping and dipping really easy right there. If I was scalped in that candle, I would have 80% out, break even, or just close the entire trade and look for another scalp for another 60. You could have 3 scalps, 180, 200 pips, and that's it. You could be in and out of that trade and not worried about, well, will it continue to go up or not? Look, it came up and coming back down. Now it's got to refuel itself. It's an inverted hammer, but you could get in and out in a range, pipping and dipping. That's what I mean. If you know how to trade a range, you know what you're doing, right? And you should know your security, okay? I know if I'm trading GU, I'm getting the same type of candle. Like this is same thing. A very nice bullish ignited candle filling its wick, doing its job, but it's not a 60, 70 pip candle like the same one on gold. This is, guys, 5 pips. It's deceiving when you look at this. That's why I told you, if I get a 10 pip gold GBP US candle, you'll see me doing jumping jacks and cartwheels in the back here. I'm telling you, I know the securities that I trade. I used to trade GBP USD for years. That's why, but it taught me what to look for. So I look for the same shit with gold, but I know that the rewards are 10 times bigger, but I know that the losses could also be 10 times bigger trading gold. So to come to gold, if you're a beginner with this type of volatility and war we're having right now, it's probably going to be a recipe where you're going to hate trading and you're going to hate trading. Do not come to gold or US 30 if you're a new trader. Stick with currency. You can really, really learn a lot over here. And then when you get the experience, you get the confidence, then you're welcome to come over here and join the party with gold and US 30, okay? But guys, yeah, and then you look at it, it did come up, it was nice, but came right back down, okay? So there's sellers here, they're still there. There's sellers here, they're still there. That was a beautiful candle, but it's still in this range. It can continue to build and make its way up there, but you know, guys, so thank you guys so much. Guys, we have a free Telegram channel. Sorry for all the talking today. Today was a Wednesday. You can call this a webinar. You can call it a whatever the hell you want to call it. Today was more of a learning course, okay? And this is my females. This is my how you look like when you start trading, okay? You might look like this. Beautiful, hair's all done, makeup, you look on point, everything. And then after a couple months of trading, this is how you might look. Sorry I'm picking on the females, but it's a female. If we had a man here, you can use me as an example. I had hair when I started trading and I lost all my hair. So that's how we can look by trading. You can look beautiful like this, and after one session, you look like this. Ew, this is disrespectful to this person over here, but I think Dave posted this last night. But you guys can use me as an example. I had beautiful hair when I was younger, stressed out, lost all my money, lost my hair. 2 years ago, I went to Europe and got a hair transplant. I buzzed my head for the first time, and the hair is looking perfect. And hopefully I'm going to grow it back. But guys, trading is stressful. You're going to lose your hair. But if you start making the pips back, your hair is going to go back. Okay? Pips for plugs. That's what we say here at SST, guys. You guys can make fun of me. Make fun of me. I'm a big boy. But take trading serious, guys. Take trading serious. Join this free Telegram. Like I said, we have follow our live sessions with Dave, myself, all the education. We have 50% off plans, guys. Remember what I said at the start of the call. For the first 3 people that sign up on a 1 year or lifetime with us, they're 50% off. We give you that. But I'll also dedicate 2 hours of my time with you to come up with a trading plan, to introduce you to SST, to show you, navigate you around the website, show you the education, show you our Discord channel, get you guys more settled in with SST, and answer any questions that you might have to help you guys with your trading, okay? But I will be back tomorrow. Thank you guys for subscribing and liking to the channel. And tomorrow, guys, is Thursday. Remember, it's unemployment claims every single Thursday at 8:30 a.m. And Dave will be doing live New York, Colmex, and Wall Street. Catch some pips with Dave. Check out our trade signals throughout the day. And then I'll come in, guys, again, post tomorrow because got to wrap it up because there's big World Cup qualifying games with Albania versus Poland and Kosovo versus Slovenia tomorrow. Got to watch those. And Friday, guys, don't forget, Friday is an early morning session, okay? So everything that I taught you guys today, we're going to be moving in the markets on Friday morning. There's not going to be like this type of education. We're going to be moving. We're actually going to be trading, okay? And tomorrow we're going to be trading as well, okay? And then I will upload on Friday evening the creating and sticking to a trading plan mindset webinar uploaded. I'm Albanian, yes. I'm Albanian Muslim. Proud Albanian Muslim. You can see I got a tattoo over here when I was 15 years old of the Albanian eagle. When I was 15 with that tattoo. Young kid, being stupid. Gold coming back up. So continuing, filling back up. Watch these levels, guys, after the call. This is where it is building up, and it might, redistribute at a time. Guys, normally sometimes we drop these calls, it starts to move. Remember, 2 p.m. is 25 minutes away, and that's a new hourly and a new 4-hour candle. So sometimes just refer to your candle, higher time frame, that's about to open. So we can see the 4-hour candle today in the green zone has a higher low, like it's been building in here, still above 50%. And it created that higher high today, but we're coming up. So if we can get that 4-hour volume closing above this neutral zone, maybe next 4 hours could continue to fill these wicks and get up. However, it's still trading in this red zone. They could push it right back down, and then it's just black, blue, black, and going sideways. Okay, you can see that the market is moving sideways. Okay, thank you guys. Have a great day today. Thank you guys so much for actually learning with me today. It makes my job easier because then when we actually really get into trading, when I'm saying, guys, I'm kind of candle in half, low wick, high wick, it's an ignited bar. You guys are learning because I'm going to be talking very, very fast. When we go into the 5 minutes, and if we go into the 1 minutes, I'm more than happy to do 1 minute with you guys, but I know it's really fast. But for learning, I know it's a perfect time frame to learn because we're seeing 60 bars open up in an hour, as opposed to just 12 5-minute bars or 4 15-minute bars or 1 hourly candle each hour. So you'll see more action. You'll see more candles. I can teach faster. We can even go to 3-minute bars or 2-minute bars. I don't care because I know that all candlesticks have the same characteristics. I just want to know if you want to learn earlier, okay? But guys, that's it for me. I got a few things to do this afternoon. Hopefully you learned. Thank you guys so much for joining with us. There wasn't really any big moves. I don't necessarily think we missed out on anything today, even if we were looking to trade this. The only thing is, guys, learn what a 4-bar double bottom or double top is, because we traded the 4-bar M pattern the other day. So what it is 4 bars. Bars is another word for candle. Okay. Sometimes I say, instead of candle, I say a bar. I've always been saying bars all my life, but the proper way is to say a candle. Okay. But this is where it was black, blue, black, blue. So it looks like a W in 4 candles, in 4 bars. Okay. Normally it takes longer duration, but there it came down, there it came up, there it came down, there it came back up. And this is now the continuation where I say the second leg of a W has traditionally more volume. And there is a situation showing that. The other day where we had a 4-bar M pattern, if you guys remember, it was a 4-bar M pattern. We took this sell. It was a Tokyo session where it came up 1 blue bar, it came back down 1 black bar, it came back up the next blue bar. The 4th bar was the one I took the sell on, and that was a big black bar that dropped for 100 pips and with 0 drawdown, right? So the same thing is happening here, going up, okay? But thank you guys. Mohammed, you don't need to spam. You don't need to spam. See, this is what I mean, guys. Now a lot of people start spamming. See GBP USD. Okay, I see. I read you. Okay, stop spamming. I can see now GBP USD. Yes, it's making a move. Okay, so you had that bullish push. Okay, is that a structural 5-minute candle? Yes, it closed above all of this. So again, Mohammed, I see you spamming, but did you do your job here? Did you open, close? Did you figure out 50% in the point of control? Okay. Has it came back inside here? Not yet that I can see. Okay, so it's still holding that. So it's continued to advance out, but the white line, remember, is a hourly or it's a line on our zone from the consolidation. So if you are trading this, yes, it did break out, but the pullback almost came into there, but didn't. So coming right back up. So it is moving up slowly. You can look at it like this. This is how sometimes I look at the charts. This whole thing is one bottom. That's one top. Again, second bottom. Okay. So it came up, it consolidated. Okay. It broke down, did not come back down in here or come all the way down in here. It's building the higher low. Let's just see here. And now it's continuing to move up, okay, through here. So again, watch now. If it closes above, it could retest this, but what you want to do is maybe if it closes above, wait for a nice pullback deeper down in here. Because remember, these buyers have not been activated. And maybe if it retests this, could be your location. But you got to think also selling too at this point too, because it's coming right back where it came in here. It is sold down. Coming back in, it could sell back down. Okay. Is the course free? Yes. If you come on YouTube, this is free. YouTube, last time I checked, doesn't cost you anything. We're here every day. This is a course. This is a webinar. We're teaching you live. Okay. This is a live webinar. And it's doesn't cost you anything. All it costs you is to hit this subscribe button. That's all it costs. And you can learn. You can learn with us. Okay. But that's it, guys. Okay. I got to get out of here. It's 1:40. Okay. Have a good day, everyone. We'll see you guys tomorrow. And enjoy your day today. Thank you, guys. Thank you for patience today. And we learned some new concepts. And I had a good call. Thank you, guys. Have a great day today. The Telegram is free. Discord, if you join the team, you're welcome to join the Discord and get the indicators, the education, the live sessions with Dave, trade ideas, everything. The complete package. Have a good day, guys. Have a good day, guys. Okay. So, guys, I know I focused on GU today, but I really wanted to because gold is very crazy for some traders. But if you take a loss, it's a very manageable loss, but you've got to take a couple wins to really accumulate the pips. Okay? But it will teach you a lot of what you need to learn in trading so that you can take it over into gold, US 30, NASDAQ, Have a good day, everyone. Thank you guys so much. See you guys.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.